Good morning, everybody. Welcome to NinjaTrader Live. Happy Friday. We have an awful lot of stuff to talk about. My name is Jim Cagnina. Joining me live from one of the greatest neighborhoods in the city of Chicago, Pax. How are you, buddy?
I'm doing great, Jim. How are you?
I'm doing pretty good, man. I'm feeling good. It's even though it's Friday, I'm still feeling pretty good, and we got a lot of stuff going on this morning.
Oh man, we do. We do. It's going to be an interesting day heading into the end of the quarter and in the month. I think we'll see part of that today and then going into certainly Monday after PCE, which is going to be crazy. Could be.
Yeah, yeah, exactly. We have some more sentiment information coming out at 10 o'clock. By the way, the Eurozone had their sentiment numbers come out this morning. No bueno, man.
Yeah, I saw that. I saw that. The bonds are starting to press up a little bit, and I'm wondering if that's the reason. Certainly, gold is breaking out again to the upside. A lot of uncertainty. The markets don't dig uncertainty.
Yeah, we were kind of talking about earlier. It's like, all right, what takes primacy here? Is it PCE today or is it April 2nd, unveiling of the tariff curtain?
I'm the wrong guy to ask. I'd like to hear Tracy's opinion
Yeah.
on that when we see her. But I know how I'll react to it. I don't. I'm not going to try to predict it. I'm not going to, as a trader, I'm not going to try to predict it. I'm not going to try to understand it beforehand. I'm not a macro trader. I'm just a kind of a systematic, technical, discretionary trader, all in one, I suppose.
Yeah, we were talking about your numbers. You have some, the levels that you put out way in advance. You paint them on a chart. It's like, oh, how did we tag this perfectly? I mean, come on, Pax. How are you getting these numbers, man?
And so it's simple math. The markets rotate from to and through the same levels all the time, and it's always been that way. When I had learned, I had three great mentors in my life. Mickey Hoffman, who taught me how to think and act like a trader. Judd Hirschberg, who's probably the best technical analyst that's out there, and the guy that and Ira Harris, and the guy that taught them the technical rotations was a man named Howard Green, and Howard came up with the way that I do all of this, and Judd taught me, and it's not rocket science. When I left the floor, Jim, for good in 2011 after MF Global, I was under the impression I didn't have enough information. All of the technical traders were looking at 13, 14, 15 different things. So I sat down and I took, my first technical analysis class was with Dan Grams at the Merck. I still communicate with him a little bit here and there. I had no idea what he was saying. Like it just didn't hit with me. But as I kind of learned, the market is always going to kind of move to and through the same levels. I just have to know what to look at. When I left the floor and I'm trying to combine different time frames with different candlestick patterns and all kinds of different things, not that it doesn't work for others, it just didn't work for me. Um, I realized that I had to simplify my trading. I had to be able to kind of simplify the way that I look at the market so that I can take consistent, repeatable, and scalable action.
Yeah.
And that's I still do my levels the same way that I did or that I was taught, and 2000 and 2001, and then again in the teens, and I look at the same highs and lows every day, and it's
Yeah.
uh, how I react to it that's going to be the important part.
Yeah, yeah. It's great that you mentioned Dan Grams. Everything I learned about Japanese candle, I learned from Dan. And serendipitously,
Hmm.
Dan's a family friend outside of trading. Like he's connected to my family, and so I get to see him at Christmas Eve parties and stuff like that all the time. So he's a great guy.
Feast of the Seven Fishes for Italians, huh?
Yeah, yeah, yeah. Jimmy Uriel loves talking about that.
I knew Jimmy when we were clerks in geez, I think the early '90s. He worked for Citibank, and he was an up and comer with Citibank, and I was an up and comer in the front month euros for Steve Mendez, and he was one of my customers. We had a lot of fun, got to know each
Yeah.
other then.
Yeah, yeah, a little opinionated, but he's an all right guy.
Yeah, yeah, he is. He's smart though. He can back up his opinions. That's what I like. Whether you agree with him or not, he's got the logical rationale behind them.
Yeah, for sure. So if do you want to take a peek at a chart right now,
Of
or
course.
all right, where do you want to start? I have gold on the chart. You mentioned gold to me earlier, and I was like, oh wait, what the heck happened last night in gold? This is just a naked candle chart, daily candle chart I have up on the screen. We broke through this long-term area of resistance approximately. We'll just round it up to 2970. I drew a fib extension just because it's all like blue sky up here, and but look what happened overnight. Boom.
Going back, if you go back to like the life of the contract of gold, back into the 70s, and you'll be able to see the kind of channel, the channel all the way back from the low to the high. Um, the breakout point was exactly where you're looking at. And I mean, going back to the life of the contract. So 2950 to 70 was, the top of that channel. So now who knows where it's going? One of Ira Harris's suppositions is that gold is not a hedge against inflation. It's a hedge against the Federal Reserve losing control of monetary policy. So I'm wondering, in an uncertain world, if that's what we're seeing, is we're seeing people flying to the safe haven, kind of a Peter Schiff idea. And gold is really beginning to take off in that sense. So where are we going to go? I don't think 31 to 24 is going to be the high,
Yeah, that's today's wick. Top of the wick today.
right.
I'm tracking 31.24 spot four.
So yes, and I'd like to see gold trade up to, let's see, 31.36, and then above that would be 32.09. So that would be a good spot for it to kind of ruminate around 31.20. I want to see what gold is going to do off the opening range this morning in 15 minutes or 10 minutes. See whether or not they try to take a little steam off of that, or whether they're going to extend off the open too. It's
Got it. All right.
interesting.
Yeah, I just put that blue line up there. That's 30. I think you said 31.36, right?
Yeah. From a capital preservation standpoint, you and I were, I mentioned this before we came on camera. I bought gold at 29.16. It was one of the best trades that I made all year long. And I've had a pretty good year. That was a great trade. However, I paid for the trade 29.30-ish roughly. I put in a scratch stop. I went and worked out, had some lunch, came back, and my position was gone. I was flat. I got stopped out
Oh
for a
no.
scratch. When I got back, we were trading at 29.60, and I got nothing on. And now we've never looked back. So I'm very mindful of chasing money. I'm very, very mindful of chasing trades. So I've only tried to catch a couple of things out of the opening range in gold since then, and I've been very careful in staying away from it because I don't want to think, well, I left $200 on the table here. Uh, I better hurry up and create that trade again, recreate it, and try to make it happen. So, you know, I'm watching it run I'm watching it run without me. And as Tanya said last week when we were in studio in Naples, there'll always be another bus. The bus came and went
Yeah,
without me.
yeah. And this is a little bit out of the Jesse Livermore playbook right here. Let me just kind of put a rectangle here. And he Jesse was the guy who was like, all right, every time we have a breakout, I want to get it, I want to buy. Every time we have a breakout, I want
Me
to
too.
buy. Every time we have a breakout, I want to buy, right?
It's how I trade.
Right. And it's scary to do that, right? Because you're buying at highs, right? You're
Yeah.
you're you're piling in at highs, and it's like, all right, well, we're going to get a retracement. I'm diluting I have an average price now, and it takes some courage to do that.
Well, it does, doesn't it? Yes, it does. But let's say we open this, the S&P is trading at 50, the low is 5111. Let's say we break, off a PCE, and we open around, the opening range is 57.14 to 16. The fact that we're opening on global, and this goes for gold or any market, the fact that we're opening on Globex's lows does not mean that it does not preclude me from taking a short. I'm going to still trade the breakouts and, from the opening range, and I'm not going to overtrade them. I'm not going to overexpense it, but I'm going to take that trade out of the opening range. I don't know when the market is going to roll over, when it's not going to roll over, when it's going to rally. Anthony and I were talking about this last week on that the Sunday night gap in the S&P from we opened at 57 40, the low was 39. When we rallied, we left that gap at 52, or I'm sorry, at 57.22, and ran. I think conventional wisdom is going to say to fade that. Anthony and I warn not to fade that, especially off the open. Don't get long because we have a gap, but don't fade it. The market will come down and fill it. It doesn't need to, you don't need to try to predict when, and you don't need to guess when. Just need to trade what's in front of you. So I'm not going to not sell a low or buy a top. I'm not going to buy 31 in gold. I'm not going to go buy 31.24s just because we're at 31.24. I have to have an idea or a plan to be able to execute. If I don't have that plan, I'm going to leave it alone. The opening range gives me that plan to be able to take, So if we open there, 31.20, we go 31.24 bid, and that's the top of the opening range. That's an all-time high. That's the overnight high. I'll get long that.
All right, so wait, I toggled over to a PAX chart. Let me go back to that
I'm sorry.
gold.
I'm sorry, Jim.
No, that's okay. That's okay. All right, so I'm back here. Give me those numbers again. That on the opening range.
Well, gold opens in 10 minutes, so I'm just kind of, theoretically. So if we open at 31.20, 31.20 to 31.24, in our theoretical illustration here. And 31.24 is the all-time high that we set overnight, and 31.24 is a high the night session, and 30, it's just the high, and it's the high of the opening range. If we go 24 bid, I'm going to buy them.
Yeah.
Because I'm trading the breakout from the opening range, and I know that above 24, I'm looking for 31.36. Above that, I'm going to look to add, and I'll take some profit up at 32.09. And if we go 32.09 bid, then I'm going to have to figure out if we go 32 right now, gold is trading in 73.5 dollar rotations. So look for another $73.50 rotation above 32.09. And that's all it is. It's real simple.
Yeah. Okay, I got it. Now, do you just refresh my memory? Are you when you define opening range, are you a 15-minute opening range guy or a 30-minute?
No, the opening range, remember how the opening range was defined on the trading floor is the first 30
Yeah.
seconds, the high and the low of the
Okay.
first 30 seconds.
Yeah.
So there's a couple of misconceptions I think about that. I'm not going to take every false breakout, and I'm not going to trade it right off the open. That's just my daily pivot. I'll always take the very first two attempts out of the opening range in any market I'm trading. Trend days come out of the opening range in the first attempt. I'll always do that. But if it doesn't come out in the first couple of attempts, then I sit back and I'll wait and wait for either a retest of the opening range or a myriad of things, or one of the first 15 handle rotations in the S&P, or gold would be like $8 rotations. So I'll take the trades based off of that, but I'm not going to fade the opening range except for the late day trade, which is like an early MOC trade. If the opening range is 57.32 and we're trading at 57.11, and another thing that we do is sometimes flat, we're below the opening range, so theoretically I should be short. The late day trade, we pop above that 57.11 price, I'll get long. But that's like a scalp, kind of a late day little trade to put some money into your pocket when you don't have anything on.
Gotcha. All right, so let's talk about some of these lines here. I'm going to go back to I have a tab. I named it PAX Daily. I got a PAX Daily tab on my screen right now. And the thing that was, you were telling me these levels that you've came up with, you published them way in advance, right? So we got a 55.09. We tagged that perfectly.
Perfect.
On March 13th. And then let's just frame the conversation here. 58.37, we tagged it perfectly twice. That's incredible.
So Anthony, me and Tracy Shuchart did a spaces about a month ago in the midst of all of this. And they asked me where I thought we can go. And we were trading, I think, around the yearly opening range, 59.49. Oh, I know we were, because we closed underneath it for the first time. So that gave us a 326 point rotation. What the market does on the upside, the market will in fact do on the downside. It does it all the time, not random. So 61.66 minus 59.49, just simple fib math. That's 326 points. Divide that in half is 163 points. So then you just swing it lower. So that takes us a couple of swings lower from 59.49, takes us down to 55.15. Now 58.40 was my quarterly pivot for last quarter. Same thing. I'm sorry, I did the math wrong. It's 217 points, 108 points. You swing that lower. Now from 58.40, it's the same thing. My quarterly pivot, 61.66 minus 58.40, 326 divided in half, blah, blah, blah. Now you swing that lower, and that takes us also to 55.15. So everything in my work from the pivots are telling me we're going to 55.15 underneath 59.49. Underneath 58.40, we're going to 55.15. Now 55.09 was my macro, what I call my macro targets, based off of 51.01 quarterly pivot from March of last year. If you put up a daily going back to last year, you can see how we tagged it broke, got above 59.09 and became a low then. So, resistance becomes support, support becomes resistance. So
Yeah.
everything, when we have, I think the younger traders call it confluence. I never heard that word until I started to tweet. But, everything was pointing underneath 59.49, 58.40. We are going to that 59.10 to 20 area, and we went right down to it.
Got it. So I'm just going to throw up a weekly on the E-mini S&P right now. And I don't want to mess up my daily too much by squishing the
Right.
too many candles.
Too many lines.
But yeah, but this is kind of a weekly to demonstrate. I have a anchored VWAP up there from yesteryear. This is from August 9th of last year. Interesting kind of level. But in any event, this is the look and feel of that move. And so would you draw that from a fib point of view, would you use this like low wick as a possible starting place?
51.23. Yeah, that's August 5th's low. Yes.
Yeah.
Yeah, you can. Yes. I'd go back even further. Ultimately, you go back to January 4th's high of 48.08 last year of 22, 48.08, which became the all-time high that we broke to in October of 22 to 35.02, I think. You take that 48.08 to all right, you take that, this might be a little bit too far in the weeds, but you take that 48.08 down to COVID's low, 21.74, and then you fib math that takes us right up to 61.25. So that's close enough to the all-time high, and that's where I kept saying that we'd go. Now, on the way back down, it's just a matter of where are we going, how, and then how are we going to get there? So I'm going to use the opening ranges to drive me to these big levels and through them. Now, when we're looking at the August lows at 51.46 in the regular trading hours, 51.20 something that you just had in, we had a number that morning. I can't remember what it was. I think it was Friday when we made that low. But when we're looking at that, now we're going to do the same math from the high to the low. So 61.66 to 51.23. Let's see what that gives me. Give me 1 second.
Yep.
It's 1,014 points, 521, 51.23, 56.44. Oh my God, I think I screwed that up. Oh no, 521 plus 56.44. Yeah, bless it.
It's all right. Take your time.
What the hell was that number? I'm dyslexic, so I have to picture the numbers in my head before I do it. So 51.66 minus 51.23 was the low, right? That's why it's one of the reasons why I remember all these numbers is because I have to imprint them in my mind. Plus,
I don't want to call you like the Rain Man of technical analysis.
I am not. I just remember numbers. Oh, okay. So you now everybody do this math with me. It's very, very simple. 61.66 minus 51.23. You divide it in half is 521, then just add that back, right? Or you subtract it from 61.66. That takes us to 56.44. Now, underneath 56.40, and we've already got levels there, right? 56.57 on the daily that we talked about earlier. And then underneath 56.57, it'll be 56.44. Underneath 56.44, the new quarterly pivot, 56.17. underneath 56.17, that changes the complexity of the entire market. Right now, we're drifting, kind of drifting. We're around these technical levels. The gap 57.22, this other level of 57.29. We stopped exactly where we should have stopped, which was 58.37. If we would have gotten above, if we would have closed twice above 58.37, we're looking at 59.49 and then back into the 61 handle. But we stopped right there and came off. So now where are we going? I'm expecting us down to 56.57 and then down to 56.44, which is that halfway point, that halfway fib between the August lows and the all-time high. And then I'm looking for that market to just keep swinging like ladder rungs, like this. One rung to the next rung, to the next rung, to the next rung. I don't know if that makes any sense, but it's simple. It's effective, it's consistent, it's repeatable, and it's scalable. It's just a matter of not over trading it, not over leveraging, not taking every false breakout. I don't know when we're going to roll over. I don't know when we're going to hold and run. I'm not going to look at 13 different timeframes to try to determine that. I'm going to let live price action give me that live trading decision.
Yeah, and I'm not surprised that we're driving toward a. I shouldn't have a red ellipse there. This is this week's candle. We had I don't know how many days were like kind of slow and low range days, right? That ATR went down from let's see, the ATR went down from 103 last time me and you spoke, and now it's 91, and that's a 14 period look back. So that's a pretty big move in just 3 or 4 days.
Yeah. Yes. Yeah. Isn't that crazy? I've got basically the same thing. I've got a 10-day look back on my ATR, but yeah, it's the same basic thing. Isn't that nuts?
It's nuts. It's nuts. I look at this candle though, Pax. This is it's a doji, right? The opening close, it's not perfect, but it's almost perfect. I mean, the open price and close price is the same. And this is kind of reinforcing again. Tracy's gonna have a way better understanding of this than I do, but this is telling me, hey, we're anticipating next week. Man, this week we're anticipating next week because pricing, the value of pricing here is the same.
Yeah, it's the same, right? It doesn't change. This isn't rocket science. It really isn't. It's if it were that easy, I'd be a billionaire. But it really, this is where everything that I talk about on Twitter. Yesterday, I did like a tweet. One of the guys in my group, who I've known it since I was a clerk in the Eurodollar pit, texted me last night when I was working out. You okay? You've tweeted all day long. So the point is that everything I tweet about is about my mindset, because what I'm bringing to this is ultimately what's going to determine whether or not I'm profitable. I can know. Anthony and I have talked about this many times, and he'd mentioned this on previous podcasts. Most of us all of us can have the high and the low of the quarter or the year in advance, and almost all of us would lose money because we are bringing ourselves to the screens, and that is just a fact. So I've got the high and the low in the year, but I'm going to try to catch every little wiggle in between, and I'm going to destroy myself. But if I take it easy and I just look kind of at the market a little bit objectively, we'll be okay, because it's more about trading for me is more about my how I take care of my mind, my body, my spirit. These levels won't change. 5509 is going to be an important level. 5840, 5837 to 40 is going to be an important level. That won't change. In 20 years, when my nephew Lucas, who's watching, when my son Gabriel is trading, those prices will still be macro levels. They won't change. They don't adjust for for rollover and things like that. It's just, it's what I'm not saying this the way that I want to, but it's the way that they're going to take it and the way that they're going to trade it and the way that they're bringing to the screens that's going to determine their profitability, as me and all of us do. My fear, what are my fears? How do I understand my fears? That's ultimately what's going to do it.
So Pax, we're getting to the point in the morning where we're going to have some potentially big news come out, released by, I think, the Bureau of Labor Statistics, I believe. or the BEA, I can't remember which one, is going to come out at 8:30 with their personal income and outlays report, which contains that core PCE number that we're all looking at. So I think it's wise of us to bring in Shy so she could kind of lay the groundwork here and tell us what the heck is going on. Hey, Shy.
Hey, good morning, guys. How
Good
you
morning, my
doing
sister.
on
How are
Capital
you?
Preservation Friday?
I
Good.
want to see that oil can on your desk you were talking about.
So, I know you can't see it in the shot. I'll show you later. Um, but yeah, so this morning we have personal spending, core PCE, PCE, personal income. Now, and this will be February's numbers. So February's personal income outlays report is supposed to show that prices accelerated. And it's also supposed to show that we see a rebound in personal spending because of improved weather and medical bills, of course, during flu season. So likely this report will indicate that there's not really an urgency for the Fed to cut rates, but let's see how the numbers come in. As far as core PCE, our Fed's favorite metric, that's supposed to print a little bit hot. So year on year, if it prints the number that they think that it will, 0.35%, then that would put the year over year at 2.8%, up from 2.6%. So that's going to show inflation running a little bit hot. So we definitely need to keep an eye on those numbers. Again, PCE spending, we've got a lot of spending reports this morning. PE spending is also supposed to show a rebound driven by healthcare essentials. And personal income is also supposed to show that it has risen. So really, we're looking at inflation come in a little bit hot. If that is the case, then I assume the markets probably won't like it, because that means the Fed might be on a hold again for the next FOMC meeting. That's what we're looking like. Go ahead.
Yeah, and so Shy, I didn't look at the Fed tool this morning. Are we still tracking two cuts for the calendar year, or
actually 75 basis points?
Okay.
Is what it's showing now. We'll see what happens after this data. But yeah, I mean, really, things look good. That we had jobless claims come out yesterday. Continuing claims were lower. Jobless claims were lower. So the labor market still looks good. So I know everybody's kind of hoping for a rate cut on this next meeting, but unless we see a weakening of this data, over the next couple of months before the June meeting, I don't really see a rate cut in the cards. But we'll see, right?
Yeah, it's kind of weird. It almost seems like consumer sentiment is down, and down and down,
Terrible.
down. But consumer spending is not. I don't know.
Exactly.
Maybe it is. But
well, I don't know. Maybe it's buy now, pay later, right?
Still a ton
I
of
worry
cash.
about that. Buy now, pay later.
Well, there's still a ton of cash out there. There's still a ton of money out there. People with money aren't afraid to spend it, I think.
Well, absolutely. Well, absolutely. I mean, you still have like kind of the older generation versus the younger generation, where the older generations have a lot more disposable income.
Great point.
Right, and then buy now, pay later for the younger generation has also actually been showing an increase. So, I mean, you can buy a pizza now on Grubhub or whatever it is on a payment plan. A little scary.
that is so crazy. That is.
Can
so
you
crazy.
really? You can?
Yes, they have buy now, pay later. Yes, I
So like put a
swear.
put a
They have-
Finsky down on a pizza and pay a $1.50 a month or a deuce a month? That's ridiculous. Well, I guess if it
Well,
works.
you can do it. I think you know what happens. I think where you kind of get in trouble is that all these little payments add up very quickly, and then suddenly you realize that you owe a lot more money than you thought you did.
Right, so I put
And
I
we
put
should.
the prices of where we're trading before the number came out. The 2-year was at, I put it in wrong, 103,
All right.
13 spot 8. 30 years at 116 spot 08, Nasdaq 19,936, and the SPOOs are at 57.28. So how'd that
All
number
right.
come out?
Wait. I got data. So we have personal spending at 0.5%. We have core PCE month over month came in at 0.4%, so even higher than expectations. Year over year did come in at 2.8, as we discussed earlier. Personal income was 0.8%. Expected was 0.4%, but prior was 0.9%. And then we had University of Michigan sentiment. Oh, no, that's not until 10. Sorry, my bad, you guys. Yeah, so that's it. So we did have inflation come in a little bit hot. So, and the market is moving down, as we talked about.
Nasdaq broke 30 points. The S&P broke 4, and bonds in 2-year, the short end hasn't moved, and the bonds haven't moved.
So there you go. So
Interesting.
there we have it.
Interesting.
So Tracy, I guess I'm kind of catching up here. So core PCE 0.4 instead of 0.3. I'm sure there's probably some rounding going on there that I don't see because I don't have the greatest data in the world. Is it a true 0.1% separation? Do you know?
Yes,
Okay.
it is a truth. So, and then year over year, again, 2.8%.
It's kind of a
A little
tug of
bit
war
hot.
between. All right,
Indices didn't.
Go ahead, Tracy. Sorry.
So again, indices didn't like it just because of the inclination that we may not get a cut at the next FOMC meeting.
Yeah, I mean, I'm looking at a 30-minute chart right now, and it's like
Mm.
it's not dramatic right now. I mean, we're just kind of again in this period of like it's just kind of the doldrums, right? We're not seeing these huge reactions that we usually do, but it is a reaction. We are selling off a little bit.
Right. That's a good point. I was just thinking that too, Jim. Gold is all right. So bonds are rallying. The 2-year's rallying, bonds are rallying, gold just popped. It was a little bit of a delayed reaction. I want to see how the equities are going to open.
Crude popped a little too.
Oh, I took crude off and put the 2-year up. Oh, it did. It did. Crude is trying to get above 70.
It likes
Okay,
that
that's
spending.
interesting.
Yep.
Yeah. 70, 50.
Wow.
And then crude's major pivot level, if anybody's paying attention to it, is going to be like 71.85 to 70, 71.85 to 72 even. If we can get above that, we'll see 77, 77 again. Otherwise, it's just a trade up there. So if you're trading crude, look for a breakout to the upside. We've been stuck in this tight range for a while. I'm really interested to see what the equities are going to do. So Nasdaq has got some really, really heavy. I don't like using the word support and resistance. Everybody uses them, and not too many people know how to trade them. But 19,810 to 19,820 is huge. That is a hugely pivotal area. So if you're short, you want to take profit down there. If we open up and we take it out, I'd want to add underneath it. The corresponding price for the S&P is going to be 57 even, 56.99 to be precise. But SPOOs are going to open at some pretty big levels. This is interesting. It's going to be interesting to see what we do.
Well, excellent.
So
well,
Tracy,
gentlemen,
really quick.
Thank you.
Hang on. One sec. Don't go.
Okay.
I got one more question. Hang on. Let me get my data in front of me. I have slower data than you. So I just wanted to kind of just go over that personal income number again, because that personal income number is part of the release. And, we saw prior, I think it was like 0.9% for that month over month personal income. Consensus was was 0.04 according to my 0.4%, but it came in at 0.8%, so pretty close to last month. I guess
Right.
is that a surprise component here?
Yes, it came in much higher than expected. So,
Hmm.
but again, still a little bit lower from the prior.
Yeah. Okay.
But it
Cool.
was the expected was 0.4%.
Yeah, so interesting. All right, awesome. Well, we appreciate that, Shai. We're going to get back to capital preservation Friday, and I will see you during our hot commodities segment.
Bye, Trace.
All right. Bye, guys.
You're the best. Tracy's
All right.
she's the absolute best.
Dude, I'm kind of new to this Twitter thing, right? So I'll call it X, but I just had my civilian Twitter, which, it's mostly about wrestling and, the other stuff. But I was an early follower of Shy Girl on X, and I just loved all her content. It's so good. And now it's like a dream come true for me. I'm like, all right, I get to like ask her questions. This is
Yeah,
awesome.
right. That is exactly how I feel about her. And she's one of the only macro minds and macro people that I read all the time. All the time.
Yeah,
She's the
and
best.
and it's just so hard to catch. It's just so hard to know everything, right? It's just so hard to absorb everything. You only have so much time in a day. So what do? You go to the subject matter expert.
100% right. And even more how to translate that into actionable trades. That is a difficult thing to do. Not something I've ever been very good at.
Yeah, no, for sure.
So
Anyway, so
look
yeah,
at gold. At the top of the gold opening range was 3109 spot 7. So in June gold, I'm talking about June gold. So we come bid above that price. It's very difficult to get long there. We just had I don't know. I don't know where we closed yesterday, frankly. We're up $25. So you're up 20. It's hard to buy them near all-time highs, isn't it? But now you've got a nice trade in. You paid for your trade, you've removed your risk, and you're looking for either the high of 31.24. If we get above that, as we were talking about earlier, that's a breakout point. You want to add to them up to 31.26 and then 32.09. It's a nice breakout in gold.
all right. So yeah, well, 31.26 we would break out from the overnight highs. That's
Mm-hmm.
right. What's that? Three to 3:30 candle printed. Give you the exact number here. We already talked about this 7 times, but I forgot the number. 31.24 spot 4. So that would be a breakout to the upside there,
Mm-hmm.
based on those purple lines I have.
Yes, exactly. And that was the all-time high overnight. And then above that takes us up to 31.36 and then another $73.50 higher to 32.09.
Do you ever pay attention to like these daily floor pivot levels?
No, not really.
Okay.
Not in gold.
Just curious.
I will. No, I don't.
I find them more useful in interest rates than anything, but I think I think folks look at them and use them as decision points on the trading.
I think so. Yeah, certainly breakouts. So one of the things that I meant about support and resistance levels is, on our experience on the trading floor was invaluable. For 1,000 reasons, a million reasons, and one of them was just the ability to be able to see what other traders do constantly, and everybody had support and resistance levels. And I was sitting with Margie Teller one time in the Merc Club. We're talking with a bunch of other traders. It, Actually, I wasn't talking. I just sat there and listened to her. If you guys don't know who Margie Teller is, she was the biggest independent futures trader in history. Nobody will equal her. She was 5'2", 100 pounds soaking wet, and she was absolutely the biggest independent trader. And she had said to a bunch of traders, you all have the same support and resistance levels. You all have the same, you're looking at the same pivots. What makes you different from you and you and you? And that really stuck with me. So most people are going to sell, a resistance level. Most people are going to buy a support level. I'm looking to trade the breakouts from there. I'm not looking to sell them. I'm looking to buy them above it. or if I have an existing, if we come up to, for example, NASDAQ coming down to a big pivot, huge support, 19,820. If I'm short, I'm not short, but if I was short, we come in NASDAQ, we come down to that level, I'm going to take profit in front of it. I'm not going to get long there. I'm going to take profit from it. And if we go through it, I'm going to sell a bunch more. It's just the way that how we turn those levels that ultimately determine our profitability, because everybody's looking to buy them down there, get long down there and risk 10, 20 points. By the time they're stopping out, I'm paying for my trade and removing my risk.
Yeah. Yeah. That makes sense. And again, that's not intuitive for new traders. That process is not intuitive. That's something that you have to trust yourself.
Yeah. And that's, and that is it. That's the crux of the matter, isn't it? Is trusting ourselves, trusting what we see and trusting ourselves and doing the work, doing the internal work to learn how to do that. That's the deciding factor as to whether or not we're going to be one of them to decide whether or not we'll be long-term profitable or not. Anybody can make money doing this, Jim. Anybody can make money trading. Can you keep it and can you grow it? That's the difference.
Yeah, yeah. Well, let's shoot over to micro NASDAQ really quickly just to see what's going on. It's really, we have lost some ground here on the latest release. I'm just going to pull up a 30-minute candle chart right now, and we have a minor gamma level here, Jack's 4 it's called, approximately 19,850, and then it's pretty close to the overnight low.
Yeah. Huge levels in the NASDAQ, 19,850, 19,820. We're talking about breakouts. Makes it very difficult to want to short them here. You don't want to short them in the hole. You don't want to sell them in the hole, or you don't want to sell weakness, right? I do. I do. I want to sell a breach of it. I don't want to preempt it. I don't want to predict it. I don't want to guess that we're going to take it out. I want to sell it as we're taking it out. Live trades based on live trading on live market information. But if I was short, I'd certainly be taking profit down there and maybe flattening. I can, take the money on a trade when you have it, my brothers and sisters. Capital Preservation Friday reminds us to do that. If you're short, we get down to these. We're down to them now. Take the profit, take the money on them, flatten up, be happy with it, and we go through it. Go ahead. You can put the trade back on. You can always reestablish the trade, but you can't get back the money that you gave up by squeezing on another 50 or 100 points. Does that make sense? It's all the same stuff in my mind.
Totally makes sense. Totally makes sense. I mean, that's the beauty of futures trading over any other market, right?
Yes.
You can get in and get out whenever you want. You can go long or short whenever you want. You don't have to wait for any settlement. You don't have to wait for T+1, 2, or 3 or whatever that is. Your margin is ready to go. So, but that's a good point though. Hey, get out, take a pause, get back in when you're ready.
Their Capital Preservation Friday means a lot of things to me, and it doesn't mean that I don't trade on Fridays. It just means that if I had a really good week, I'm not going to, if I made a few thousand, I'm not going to try to make 50,000. I'm not going to try to exponentially increase it and blow my week. I've blown a lot of weekends trying to double my week, and if I'm down money, I'm not going to try to hurry up and make it back in one day. I got to save my week by making back my money. I don't chase money. Capital preservation reminds me to kind of, take it easy. I'm going to trade, but I'm going to maybe be a little less aggressive. I don't care about my stats. I don't have.
So on a bigger picture basis, let's say you had either a really good week or a really bad week going into Friday. Was there a case where you're like, you know what, I'm not even going to log in today?
If we don't have any, if there's no reason for the market to move, if we don't have any market drivers and the market is kind of, in the middle of nowhere, we don't have anything interesting going on, then yeah, I'll just take the day off. Yeah. But if we have market drivers, we've got the end of the month, end of the quarter coming up. We've got, some preemptive tariff stuff possibly. We've got PCE today. We're opening on the lows. We're opening at support. I'll be ready to go.
Yeah, this is one of those Fridays. Like where you got to pay attention. Then once
Yeah.
a month we'll have the employment situation report. They changed the name. It used to be called the unemployment report. On the floor, we'd call it unenjoyment Friday.
Unenjoyment. Yeah.
And now it's the employment situation, probably because it sounds a little bit better.
That's interesting. Yeah. Yeah. Unenjoyment. Everybody come in all hungover and, the Euros open at 7:20 and people would come sauntering in at 7:10. And oh my gosh, those were fun days. Yeah. Fun
Yeah.
days.
Yeah. Anyway, that was in the past. But now we're I don't know. I'll say it out loud. Politically correct
Hmm.
employment situation.
I'm not very politically correct.
A lot of traders aren't, by the way.
I know. I know. I try not like, like I try to, I'm mindful of my words and the words that I use and how I say things. But when I'm trading and I'm talking about trading, F-bombs come flying out of my mouth pretty consistently. Anybody in my group knows that. And it's, it's a little antithetical to the way that I think and the way that I am. But holy smokes, it's just the way that we grew up. It really is the way that we grew up. On the floor anyway.
Yeah.
I mean, I was a teenager when I went to the Chicago Mercantile Exchange. I was just a kid when I started.
Yeah, no, I was too. I was in high school, man. As summer clerk
Somebody in
back
the somebody in the chat had asked about my win rate. I have no idea what my win rate is. I don't win money and I don't lose money. I'm not a loser. If I lose money, I'm a loser. I'm not a loser. And I don't win money. This isn't a game, it's a business. I spend money, I'll spend money, and I have expenses, business expenses, and I have profit. Like any other business, I have profit.
Yeah,
And
so on that point though, I mean, I was I was a retail futures broker for 20 years before I got into so we started doing this online stuff about 4 years ago. And anytime somebody would come to me and say, "Hey, I want to follow so and so because they have a 4-to-1 win rate." And what do you
Mhm.
think of that, Jim? I'm like, anyone who's publishing that kind of, a non-registered entity publishing that kind of story, red flag on the field.
Oh, 100%, 85% win rates, 85% win rates don't make money. My uh, I don't know what you would call it, but my win rate, my stats, the majority of my trades are probably expenses or certainly scratches. I scratch out a lot of stuff and I take small expenses. So probably 80% would be scratches or expenses. To me, the deciding factor as to whether or not we're going to be long-term profitable is how we go big, how we go small, or not at all. So today, small or not at all day, unless we take out 57 even in the S&P, and then I'll size up a little bit. It's how I increase my size, decrease my size, and decide not to trade. Not, I've got an 85% win rate. Why can't I make money? What
So, so one thing you said something brilliant right now that folks might have missed. I caught it, but folks might have missed it. The hardest thing to do is scratch the trade because at that point in time you think you're still right, and you're willing to move your stop a little bit further because the market's wrong and you're right. But scratching that trade is a hard thing to do, but it's a necessary part of what we do.
it took me one of the things Anthony and I learned this from Mickey Hoffman. A scratch is as good as a winner. It's an old Singer Winger line, and in this Singer Winger was an old FCM,
Yeah,
and in this class that Mickey had, UOT, he taught us how to scratch trades, and I didn't do that in the class. It was like a simulator, for pit traders, and he would yell at me, and it wasn't until I kept thinking, why would I want to put on a trade just to scratch it? It doesn't make sense. I'm going to lose money or make money on it. It wasn't until after I'd blown up in 2011 and 12, and then came back to trading one lots and two lots in 2013 and rebuilding my career, that I started to actually see not the benefit in it, not just the value in it, but the incredible, brilliant wisdom, as you just said, in scratching my trades. So my loss, is going to be missing moves, being short, scratching out a trade, gold, being long gold at 29.16, scratching out that trade and having it run. That's a loss to me. I lost that trade. I don't chase that trade. I don't try to recreate that trade. I'd rather miss a move than to lose money all day, every day of my life.
Yeah.
I would rather miss a move than to lose money all day, every day of my life. That'll keep me in this business. That'll keep me in this business. And
Yes.
that it'll give me huge trades in the future. Maybe not today. Maybe I missed that big one, but there'll be another one.
Yeah, I mean the best thing that there's three outcomes. The best thing the best thing that could happen to you is you have a winning trade. The second
Mhm.
best thing that could happen to you is you scratch a trade or you don't make the trade. And then the third best thing that could happen is you lose money, which isn't the best thing. But those are the only three options.
Right. That's it. Yeah. Yeah. Somebody had asked me on Twitter when I started tweeting in like 2019 what my RR was. I had to Google it. The hell is RR? So I'm not going to risk. Well, I won't risk 10 points to make
Yeah.
15 or 20. I'm
Yeah.
not going to sell 57. By the way, this is going to be an important open in the S&P. I'm not going to sell 57.11s and put in a 57.20 stop. I mean, it's just not the way I trade, and especially at this point of my career. I've rebuilt my life. I rebuilt my career. I'm not nearly as active as I used to be involved in the markets. I'm not nearly as I'm aggressive when the market tells me to be aggressive, but I don't have a need, financial or emotional, to trade every day. I don't have a need to be part of every wiggle and every little move. And I sure as shit don't, I don't trade the noise. I don't try to scalp the noise.
Yeah, yeah. So, I mean, what I'm seeing here in the E-mini S&P, and then by the way, folks, before I say this, a couple questions about scratching a trade. Yeah, so scratching just means you get out where you got in, right? Trade's not working. I have an opportunity to get out where I get out where I got in originally. Maybe within you could even say, well, a couple ticks around there is fine for a scratch. But you guys got that exactly right. That's what that means. Anyway, back to the E-mini S&P. I mean, we have a double bottom right now
Mhm.
from, early morning. This is the European session lows, the London session lows, I should say. And we just tried to tag it again. And there's my S1, by the way. I love these pivot numbers.
Yes.
And we flirted with breaking through, and right now we're just kind of waiting again.
So now the S&P, if we opened like around here, the levels that are important in this area is at 57.21. Do you guys remember? Anybody remember what 57.21 is without having to look at a chart? Go back to July and look at it. 57.21 was the all-time high that we broke from to 51.20, still depending on what you're looking at, 51.26, or if you're looking at regular trading hour, the low is 51.46. So 57.21. And then which was also the gap from the other day that we filled yesterday, the gap from that we left from Friday, 57.22, and then 57.29 is a macro level. So we're going to open at all of these big levels with that double bottom, on the shorter term stuff, just above the old quarterly pivot at 56.99. So there's in the NASDAQ also opening at really, really big support levels. That doesn't mean that we don't break and take them out. It just means that until we do take it out, I'm not going to be very aggressive to the short side. If the opening range, sets and we rally, I'm not going to be aggressive on the long side, but I'll be a little long for a little bit of a bounce. Does that make sense, or does that sound like I'm double talking?
No. It totally makes sense. It totally makes sense. If I kind of even like expand this chart a little bit, you'll see that there's that 5,700 level. It's like it's beckoning right now.
Yes.
It's like, look at me, look at me, look, I'm a shiny thing. 5,700, Jack's one, also a blind spot three.
Yes.
These are Menthor Q levels. So that also kind of frames the conversation for me. If we do get some kind of momentum and a break in I like to see candle closes, whether you talk about a 15-minute chart or a 30-minute chart. I like to see candle closes. A lot of times, recently, the E-mini S&P included, but the micro Nasdaq in particular, you get these big wicks on these candles. So
Yes.
you have to manage those big wicks, right?
Yes. Yes. Yes, you do. Right. Yeah. It's not, and that's a whole nother thing. It's not easy to do. It takes, I don't like using the word discipline, because that's another word nobody defines, nobody takes the time to actively define it, or patience, but it takes discipline and patience. And, if you want different results, you have to take different actions, right? If you want to have good, healthy self-esteem, you have to do esteemable things. So, you know, most of us are going to want to try to preempt that, and most of us are not going to want to try to everyone's going to try to, I'm not saying this the right way, but everybody is going to try to attack that way too quickly. You know, whether you're talking about wicks or you're talking about half breakouts, you know, you really, really have to be patient. I mean, I'm going to sit and watch. If we take out 57 even, I'll be selling them. If we hold 57 even or 57.11, 57.12, we start to rally, well, I'll be a little bit long, but you know, I'm going to pay for my trade right away. So I trade. Somebody had asked, Stella had asked a second ago about how I manage my positions. I trade out in quarters. So to keep it simple, if we rally out of if the opening range top is 57.19, you know, I don't trade 4 lots, but I'll buy a 4 lot at 19, and I pay for my trade by removing my risk by selling, you know, 25% of my unit at 4 points or 15 points, depending on how big the ATR is. And then look to take profit at my next target, which is already predetermined before the market opens, which is B 57.29. If we get above 57.29, then I'll buy more, right? Most traders are going to average in losses. Most of you do that. And it's why most people fail. Great traders are going to average in profit. And that takes experience. It takes a process to live your life by. And it takes a process to be able to trade by, a consistent, repeatable, and scalable process.
Yeah, no, that's so wise, and it's so, you know, your initial reaction, you know, your basic human reaction to a market going against you is, well, I'm going to cost average in, I'm going to buy another one because it's going to turn around because I'm right, and that's an instinct that you got. I think it's inherent, right? I'm not going to admit I'm wrong. I'm not going to admit I'm wrong. Admit you're wrong because
Right,
you'll live to fight another day.
right, right. You live to fight another day, and maybe tomorrow is the day that you catch a 2, 3, 4, 500 point move. Maybe tomorrow is just another day that you cover up your expenses and you make a few bucks. Or,
Yeah.
you know, you've got expenses and you shut it down, and you leave and you take your loss and you walk away. Yeah. You know, who knows? But, you know, when I started trading again in 2013, 1 lots and 2 lots, my only goal was to be green. If I made $100 or $200 or 500, I was satisfied because I knew that 2, 3, 4, 500 would be 2, 3, 4, 5,000. And I knew that 2, 3, 4, 5,000 would be 10, 20,000. And it has been in more, and it has been those things. But first I had to learn how to make money. I had to learn how to break even. I had to learn how to manage small expenses, and then I had to learn how to be profitable in order to exploit that profitability so that I can scale that up.
Yeah. And when you end up with $100 in your pocket after the day, it's not a wasted day.
No.
You know, you learned and you took the next step to being disciplined and patient.
Yes. Right. Right. You're learning how to be profitable. A C
Yeah.
note a day is better than a sharp stick in the eye.
That's for sure. Hey, let's take a peek. We have a couple minutes left before we get Sara in here. Let's take a really quick look at micro Nasdaq's looking structurally the same, right? Systematic price action between the two stock index futures right now. We have your 19,820. I have a PAX line here. My blue lines now are going to be PAX lines. I have that 19,820 line down here, beckoning to see if we can get down to that put support 0 DTE. That's
Yes.
a little further south.
Yes. Yeah, we can stop in here, you know, and just kind of push around a little bit. It's going to be interesting to see what we do. I'll, like I said earlier about the opening range, I'll take the first 2 attempts out of the opening range, and if I don't find it easy, I'm going to sit and I'm going to wait, and then I'll look to trade the breakouts below these bigger levels. Yeah.
Got it. All right, let's take a glance at gold really quickly here, since this seems to be the mover of the day here, up $23 or so. Let me just open this again. 30-minute candle chart, everybody. We have the gamma levels on, you know, actually this is weird. This is like JAX1 is like right in the middle. It's like at 3110 today.
Yeah.
So kind of an odd number and just a kind of a weird placement based on the volume profile so far. But we're range bound here as well at this point.
But also 3110 is also basically the top of the opening range. So these levels are always going to continue to coincide with one another.
Totally
So yeah,
makes sense.
where'd they stop? 3119 looks like, right? Ish.
Yeah.
Yeah.
Yep, exactly. And that's that 1 day max, another mentor Q number we talk about from time to time. Yeah, all right. Well, we'll see what happens, man. It's great having you on. And I love it. This is like one of my favorite segments. Me and you
Oh,
in
thanks.
the morning now, and we've only done it twice.
Yeah, thank you, Jim. I appreciate that. Listen. I can't. I can't recommend. Uh, I listen to this every day. I don't put on CNBC anymore. I'm listening to NinjaTrader Live. I'm listening to Tracy. I'm listening to Jim for proper perspective in the morning every single day. And then I listen to the traders that come in and live stream. So I'm looking forward to hearing Sara and see what she does in off the open too. Great group of people.
Absolutely. All right. Thanks, Pax. Appreciate you, man. Have a great weekend and be safe and all
God
that
bless
stuff.
you all.
Enjoy your family. God bless you
Thank you,
too.
Jim.
We will see you next week. We are going to bring in, we have Sara, the Strat sniper, live right now. How you doing, Sara?
Hey guys, how are ya? Happy Friday. So, let's get into this.
Yeah. So first of all, how
We're
you
gonna
doing
kind of
today? We have a little delay. Could you hear me
can't really
okay?
hear it, Jim. Nope,
Okay.
little delay.
So what I'm going to do, go ahead. We can hear you. So why don't you go ahead? I'll back out a little bit. You go ahead, pull up your charts, tell us what you're looking at and do your thing.
Okay, perfect. Yes, little delay is difficult in the ear. Okay, so let's talk about, so with the strat, we use multiple time frame analysis, and we're going to talk about that because we were long earlier in the week because we were at, first of all, downside exhaustion on 3 out of the 4 futures, meaning we took out that September low, and we got an inside bar reversal to the upside. And if you guys follow me on Twitter, you saw me mention that we were at potential upside exhaustion because we took out the target from 2 weeks ago at, what is this high? 58, basically call it 5809. So for us, that means that is potential exhaustion risk. And what that means is that is where we can expect profit taking to happen and reversals to happen. Doesn't mean that it has to, but if it's going to, that's where it's going to happen. And so when we originally opened, we were a green week. We hit the upside target. And the following day, on Wednesday, that is when we saw a reversal. So if you're not familiar, I want to pull something up for the people because if you're not familiar with the strat, you're not going to know what reversals look like. And this is kind of what we do because there's only a certain amount of ways that price can continue up or reverse down. So we look for things, right? So what happened on ES on Wednesday was this guy because we were at upside exhaustion. So again, if reversals are going to happen, that's where they're going to happen. And they're going to look like one of 3 things. It's going to look like an inside bar break to the downside. It's going to look like a 2 up, 2 down reversal, or it's going to look like a 1 bar reversal, which is an outside bar. And if you look at the charts, let's see if I can make this a little smaller. If you look at the charts on ES, this was, I believe, Tuesday. This was Wednesday. So this is a 2 up, 2 down reversal, which is this guy. If you can see where my mouse is circling, 2 up, 2 down reversal. So we were short Wednesday, targeting here and then this gap fill here, which we did get. It just took an extra day. And then if you look on NQ, on the right side of the screen, NQ was a 1 bar reversal, which is this guy here, the one bar rev strat. And what that means, and we were calling for an outside day in pre-market in our Discord because we took out the highs of the previous day. So we took out Tuesday's high and then we started falling back in. And when that happens, we look for outside days. So if we fail the highs of Tuesday, we're looking to take out the lows of Tuesday, which we did, which is target 1. And then they even gave us target 2, which was down here. And you can see on Wednesday, we took out, what day is this? 324's low. So that is what we call magnitude. That's our target. So again, there is only 3 ways that really price can reverse, and we saw them all happening at the same time. So we had a simultaneous market break to the downside on Wednesday, and still, even now, we are continuing down. So 2 down, 2 down. So the trend, this is a very simplistic way of looking at the market, but the trend is down, and that's what's so great about the strat is you don't have to really understand all the nuances of technical analysis or price action. You just know if we're 2ing down, you're short. If you shorted here, which is where we look to short on the 2 up, 2 down day, you're still good. And it's kind of funny because I remember I was on here last Friday and I was talking about this double bottom. So the 318 low, which is 56.51, and the 321 low, which is 56.20 or 56.51 and a quarter. And I remember on Friday's stream, I said that I wish that ES would have taken it out and then reversed, but it didn't. And then I also said that we're going to come back down at some point and break these lows because the market just doesn't like to have nice, smooth, equal lows. So I don't know if this is going to happen today. So what we're looking for is continuation down. So as long as we're below yesterday's low, you can look to remain short, targeting these double bottoms here, this double bottom. And I also said what we say is double bottoms are made to be broken. And using our multiple time frame analysis, if you go to the week, we potentially could go outside week today, which just further confirms the downside bias in targeting this 56.51 level. Now, if it doesn't happen today, that's fine. And we have what we call a bearish rev strat setting up on the weekly chart for next week, meaning the buyers were not strong enough. The sellers took it down. The sellers turned the week from green to red. So we can say that the sellers in the weekly time frame are more aggressive. And so on a rev strat, we would look to target this low right there. So March 14th weekly candles low. And same with NQ. If we don't go outside week today, which I would actually prefer we do not go outside week today, so we have a bearish setup for next week. And NQ is the only one that didn't hit that September downside exhaustion. And that's what we will be targeting for next week. So target 1 would be the March 14th low. And then target 2 would be September 6th low. And I can also show you on this picture, because again, there's only a certain amount of ways that things can reverse. This is a rev strat. So if you see where the mouse is circling, we had an inside bar, which we did last week. We had an inside bar. We had a 2 up that hit weekly magnitude. And then so next week, we will be looking for the 2 down. And just like I showed on the charts, to take out, I think it was March 14th low. So that's kind of where we're at and what I'm seeing. And if you guys want this strat cheat sheet, because what we're doing is we're always we're always trading to make compound outside bars. And what I mean by that is, like, especially with ES and SPY, this 2 up, 2 down, if you can blend these candles together and make them one candle, you'll notice that they are an outside bar of this candle. And that's what we're always doing. We're always playing for compound outside bars. And we're trading what we see. But if you want this little diagram, you can actually go on my Twitter, and it's in my pinned tweet. My handle is @TradeSniperSara, and it's in the pinned tweet. And then we strongly encourage people print this out, keep it at their trading desk, put it on their desk, put it in front of them, just so you have something to refer back to. Because again, there's only a certain amount of ways things can reverse or continue. So we know when to exit longs or, begin shorts. So next week, if we take this week's low, we're looking to go back down there. If we go to the daily time frame, this is what we call continuation down. So we do not short. Sorry, I have a little bit of a sore throat. So we do not look to short on two down, this big red day on Wednesday, 2 down, 2 down. We do not look to short at the 2 down lows. We're shorting from up here, and then we're holding until we get a reversal. Or if we're going to continue down, we look to the lower time frames, such as like the hourly. We use the hourly a lot. It's a major signal. And you can see perfectly, we had an inside bar. So a 2, 1, 2 down reversal. Where's the target? The target's down here. So it's done that. But we will look for corrective activity. Say we trade up, and then we'll look for shorts back down. And I'll pull up a 2-1-2 reversal so you can see it. Next to, I wish that thing would quit coming up. Right here. 2 up, inside, 2 down. So this is exactly the same as this. And you actually had 1, 2, 3, 4 targets. So a bit of a pivot machine gun. And what we mean by that is a series, usually 5 or more, but 4 will do, but a series of higher lows. So you have a low, you have a higher low, a higher low, a higher low, and that's where people's stops are. So if people are long anywhere from down here, and they say they're trailing on the 60s, that's where stops are going to start triggering, and also natural selling is occurring, which adds to the downside momentum, and that's just what we look to do. So right now, we have taken out the lows, and you can see this 60-minute chart. They are coming right back through the range. So it's possible this morning that we actually get back up to 57.40. That's where it's trying to go. This will be your broadening formation. So you have a low, and you have a slight lower low. So that's downside exhaustion. Once we took out this low at 57.12, that's it for the short. Now you don't know because you've hit your downside target. So now we're potentially we're already back into the range. So we would be looking to get up here. This is why we don't take daily continuations, because you're always entering at a level of exhaustion. So we'll draw our broadening formation like this. And then what we would want to see, if the trend is going to continue down, you can play it to the long side until you get up to here. And then once you get up there, then you don't know again, because then you're at upside exhaustion. Then we would look for a reversal back down. So you have a low, if you can see where my crosshair is, a low, a high, a new low. So we'd be looking to make a new high. And then if the setup presents itself, we would be looking for a 60-minute reversal. So one of these things back down, which is usually an inside bar and down, or a 2 up, 2 down reversal. So that's kind of what we're gonna, watch for this morning. It is Friday, so just take it easy. We don't like to go super hard on Fridays and have, be feeling bad about yourself all weekend because you did something silly. Sorry, I'm just reading. I can finally see the YouTube chat, which is nice. My people are here. Hello, Stratters. Hello, soon-to-be Stratters. Hi, Sandollar. Hi, Lane. Queen of Magnitude. That's what they call me. Because I'm always screaming at people to take profit at your target. Hi, Solanki. Hi, guys. If you say hi, I'll shout you out. Hi, Michael. A lot of these guys are from our Discord. Hey, Jason, you made it. You guys might know Jason from Twitter, Jason Krutsky. Cool, cool. And if you guys want to join our Discord, we have a free Discord. The link is in my Twitter bio. And what's trying to happen right now, if you look at the charts, the 60-minute is trying to go outside bar. This would be a 1-bar rev strat. So above, it's trying to get to 57.35 and a half. And then ultimately, up here. And it's almost at an outside bar. So again, this is one of the 3 ways that price can reverse, right? A 1-bar rev strat. So you take out the lows, start reclaiming, changing continuity. And when I say continuity, I mean color of the candle. So at one point, we opened here and we ticked down. This candle was red. Then it traded back up, turning it green and coming back into this range, right? So where is it trying to go? If you fail one side of a range, even on the hourly time frame, this works for this works for all the time frames. If you fail one side of the range, we are looking to take out the other side of the range. This could be a 1-minute chart, a 5-minute chart, a monthly candle. The strat works the same. And we look to take out lows and then reverse. We look to take out highs and reverse, but we prefer to trade in the direction of time frame continuity. But if you're a day trader and you saw this go from red to green and start coming back through, you don't care about the higher time frames. You're trading to get to here. And we have, 45 minutes, 44 minutes left in this candle. So it should get at least up here. And then let's look at the higher time frame. The 240, so this is, didn't mean to do that. This is the 4-hour, and same thing. So we ticked down, took out the lows, and potential for an outside 4-hour, which I believe is the top of our hourly broadening formation. Should be. Nope, that's a secondary high. That's that one. But if you view this as a range, so this swing high to this swing low, and we're coming back through the range, we could also get up here at 57.48. But one step at a time. Let's see what the reversal looked like on a smaller time frame. There you go. So again, so like I said, this works on all time frames. So you had this 15-minute, this is a 15-minute chart, tick 2 down, reversed, flipped green. Where is it trying to go? It's trying to go up here to become an outside bar. That's only one of the 3 ways that price can reverse. A 1-bar rev strat. It did that. Then it's coming for all these short stops. So that's why we should likely easily get up here, as long as we don't reverse. Hi, Shanti. So somebody in the chat said I must be weird because I don't have targets. I just hold on to my profitable trades until the chart says to get out and get out of my losing trades immediately. So that's what's great about the strat, is it's so rule-based. I'm going to pull up this image again because it's awesome. So with the strat, we have 3 components. If we're getting into a trade, we know our entry, we know our target, and we know our stop. And there's different levels of stops that you can use, but just for simplicity's sake, we know our entry. So our entry would be a break, and a lot of traders are familiar with the inside bar break. It's not like new or anything, but you have an inside bar break. So you enter when this candle opens, trades above the high of the inside bar. That's your target. Now, do you have to close it all there? No. Should you lock in profit there? Yes. If you want to leave a runner, that's totally fine, because you know this could continue going 2 up, 2 up. Because again, we know what reversals look like. So price can't reverse unless we get a 2 down. So you can trail that way on whatever time frame you want. It could be the daily, it could be the monthly, it could be the yearly. Like, we use yearly charts. So yes, you can leave a runner, and then you've made money and you're letting it run, and your stop is at break even. So say you wanted, we have a whole, let me see if I can pull this up for you guys really fast. I'm trying to pull up the stop loss. PDF. Uno momento. Yeah, the SMCI trade was awesome. Let's see, hold on. One second, sorry. I'm trying to find it because it's also a really great visual of where you can put stops. Here it is. Okay, let me drag this over. So there's 3 kind of stop losses, and that's based on the evidence you have if you have simultaneous breaks, but we have wide, tight, and tightest. So wide would be a reversal against your entry time frame. So for instance, with ES, that 2 up, 2 down on Wednesday is still good on Friday because we have not gone 2 up. Okay, the open of the candle you enter on, which is a time frame continuity stop, and then you have the tightest, which is the spread plus a penny. And what we like to tell our traders is, like, get really good at stopping out, because people look at stop outs like they're terrible, but they're not. So get used to practicing, get used to stopping out, even if you're only trading 1 share, if you want the tightest spread, because when the VIX is high and we get a trigger, it should go instantly and it shouldn't come back down. So for instance, here is like the image. So this is a 2 up, 2 down reversal. So you short below right here, and then this would be considered a wide stop. And as long as you don't get a reversal against, it's going down here. This would be the tight, which is a continuity stop, because again, this is a 2 up, 2 down reversal. So if it triggers and comes down a little bit and then flips and turns green, you want to get out because of why? Because this candle could turn into an outside bar, because what we were just talking about is when you fail one side of the previous range, you're looking to go outside bar. So if your trade is not in force and you are not below this level, the reason for you being in the trade is now gone, and you just want to get out. And then the tightest, which again, get good at stopping out. Even if you're just trading 1 share, your entry plus a penny, plus 10 pennies, whatever. But you don't want it. You don't want to give it room, and you're going to stop out a lot, and that's fine. But when trades go and like the volatility is high, they're just going to go. So we have We have, lots of different stops, and people I find struggle with stops the most. But just always consider, are you in force? Is the trade still good? If it's not still good, you don't cross your fingers and hope and pray, you get out. Because the ones that are going to go, they're going to go. Let's see if anybody has any questions. Let's see. I've got 3 screens, so I'm very excited. I can see the YouTube chat, I can see TradingView, and I can see NinjaTrader, which is lovely. I do not speak Spanish. I am not Spanish. I am Italian. I feel like I answered that question. Solanki said, I've traded for over a decade and I can verify this is the only profitable system I found. Maybe it's me. The thing is we just trade what we see. We trade what is happening, and we're not married to a bias. It's completely objective, because if you're looking at, sorry, I'm trying to get this. If you're looking at a daily time frame, right? Like, some trader might see a cup and handle or something, or a head and shoulders, which is subjective, right? And the most, what I found is the most commonly misdiagnosed pattern in technical analysis is the head and shoulders, because it's usually a broadening formation. If that right neckline is lower than the left, it's not a head and shoulder. It's a broadening formation. But we know what's happening. We see what's happening. So even if you entered down here, trying to go up here, this trade is still good. You're still good. The price hasn't reversed. Now on the next 15-minute candle, if we get a 2 down, then you would look to reduce or cut, and you're still making money. It's just, we know that price how it reverses. So we don't want to be in there if it reverses on us. And it's a great way to just trail. I wish I did know Spanish. I wish I didn't take French in high school, because I don't know where in America I'm going to run into French-speaking people. Let's see. So, I guess to kind of simplify, even if we don't get down here today, next week we will be looking to get down here because of the weekly setup. And again, if you need that strat sheet, go on my Twitter. It's in my pinned post. RevStrat, bear. So you have bullish RevStrats, you have bearish RevStrats. So there's a bull and a bear setup for each of the reversals, which is an inside bar reversal, a 2-2 reversal, a 1-bar RevStrat, a 2-bar RevStrat, which is what we're looking for next week for the futures and broadening formations. And if you're not trained, you're not going to see this as a broadening formation, this 2-bar RevStrat, but it is, because if you can blend these 2 candles together, it would look like this. It would look like this whole first candle. If you blend the second 2 candles together, that is an outside bar of the first 2 candles, which is a broadening formation. It's just on a lower time frame. So we teach people to get good at blending candles with their eyes, because that's kind of what's needed. Oh, the pivot machine gun. Can we talk about the SMCI trade? I'm going to talk about that for just a second, because it was really awesome. And it really shows like all the strat principles kind of in action together. Hold on just a second. I got to pull up a different layout. Actually, hold on. We're not going to do that. No. Maybe I will. Hold on 1 second. This was just so awesome. Woo-hoo. It's still good. Okay, I'm going to pull up this SMCI trade for a second. So let's start at the weekly time frame. And again, when we fail one side of the range, so you could have taken this long, right? But you would have quickly been out of it. All right, I got to hurry. The market's open. So we took out upside exhaustion. We took out this pivot on Tuesday, right? And what happened? We got a 2 up, 2 down reversal. And this is a pivot machine gun. So remember, I was mentioning multiple, usually 4 to 5 higher lows. So on Wednesday, we shorted this because we had upside exhaustion and we had a 2-2 reversal. So the main target for that day trade was at 37.85, which turns the week into an outside week. So again, using all of our time frames, we expected it to go outside week, because when we fail one side of the range, so you view this inside bar as the range, fail it, where are we going? At least down here. It's trying to go down there. And then that just triggered a bunch of, stops. So more pivot machine gun. Where is it trying to go today? Down there, which I think it just did. Yep, so it took out the target by 1 penny. So the last target is 34.51, and today we hit 34.50. So if you took this trade, here, let me get the short tool, which I always struggle to find. Say your stop's there, target there. That is a 7.5 to 1 RR. And I will take this every time. This is my favorite strat setup. It's upside exhaustion, because I prefer to play bearish. Upside exhaustion, and then into a pivot machine gun. So this was beautiful. So I hope if people were still in, they just got out in the Discord. Okay, anyway. That's that. I gotta delete all those drawings real fast. And I posted this in the chat. It's funny. We'd get criticized on Twitter all the time for being like hindsight traders. And it's like, no, it's just hindsight to you because we didn't tell you before it happened. But like, there are receipts. So it's funny. Okay, let me get my ES back up. What's happening? Let's see. Ooh, they sold them down at the open. What's that? Hold on. We're going to do some strat stuff. Okay. This is awesome. That's a pivot high. Right here. This 2 up, that is a pivot high. So that is where stops are. Okay, so if you took the 3-2-2, which is also a strat setup, it's on the chart. It's on my little, I don't know what you call it, my little graph. So you're at, if you took this long from here, that's magnitude 1. That's target 1. So again, like I was mentioning, once you hit your targets, do you have to get fully out? No. Should you take profit there? Yes. If you want to hold a runner, that's fine. But then on the next candle, you get an inside bar. Is that a reversal? A 2-1-2? I'm going to just keep pulling this thing up. Is that a 2 inside 2 at upside exhaustion? It is. So if you were holding a runner, you got to get out here when we go inside and down. And if you're a ninja and fast enough, you can even flip short. Where are we trying to go? We're trying to go back down here because you have your high, low, new high. They're attempting to make a new low. So this is part of the broadening formation, how we trade, what we look for. Does that make sense? Does anybody have any questions? So Strat and ICT. Before ICT got really popular, there was the Strat. We had, a big community on Twitter, and the Strat and ICT are very similar. I did study ICT. I watched all 40 plus videos. But it's all the same thing, and the reason, not all the same thing, but the major principles are the same, and the reason for that is because it's just the proper way to analyze price action. So some of the similarities are top-down analysis, so starting at the higher time frames and working your way down. So again, like we start at yearly charts, and people are like, that's crazy. It's really not. Like, you go on the yearly chart, you mark your level for the year, you mark it if it's a 2 up, 2 down reversal, and then you don't have to look at the year anymore because it's now on your chart. And proper annotation of your charts is everything. Then we go down to the quarter. We mark your reversals on the quarter. You only have to look at those 4 times a year because it's on your chart. It stays on your chart. Then we go down to the month. You mark your triggers, your Strat reversals or continuations. You mark that. You only have to do your monthly lines once a month, and they're already on your chart. You just have to move a little line. Weekly, we use 12-hour for futures also. 4-hour, you just keep marking them. Just mark them. And I like to say that using top-down analysis is like a magic eye. It is a magic eye into price action. And it's funny, like we have a lot of traders like learning and stuff, and they're like, what do you think about this chart? And here's the daily. I'm like, I am blind. If I don't know what the higher time frames are doing and you're showing me just a daily chart, I don't know. I can't really give you, the information that you want. Now, through learning the Strat for so long, if I shrink the daily down, I can blend the candles together and sort of see the bigger picture and what's happening, but it's just much easier to mark your setups, just like SMCI. And that also helps when you get into the lower time frames, because if you don't have your charts properly annotated, then when you get into the 1 minute and the 5 minute and the 15, if you don't have your daily trigger and your daily targets, you're going to get so lost on the smaller time frames, and it's very important that you mark them right. Let's see. So you'll notice NQ, so you've got a little divergence here. NQ, like we were talking about, you've got a broadening formation. So they went 3, 2 down, 2 up, simultaneous break, because they both did it, right? Is this a reversal, a 2 up, 2 down? It is. So if you took partials there, you'd have to exit right there, and then you could even flip short, again, if you're fast enough. And where's the target? To come down here. And you'll see that NQ did. So ES is a little stronger because it did not take out the lows, but NQ did. So here's your broadening formation. Pivot high, new low, follow the cursor, new high, new low. So you can just be a broadening formation ninja, right? Because you know what is happening. You know what reversals look like. Again, there's only 3 ways price can reverse. If it's going to happen, it's going to be, again, an inside bar, like ES, inside bar down, or it's going to be a 2 up, 2 down, or right here, it's going to be a 3. It is the only way price can reverse. We don't care what you call these candles. We don't care if you call them a morning star, a doji, a flying cat. Like, we don't care. We only call them 1, 2s, and 3s because that's all there can be. And it just simplifies the strat so much. I'm talking a lot with my hands. Sorry, my Italian's coming out. Yeah, but again, the similarities with Strat and ICT, very similar. And like I said, I did study all of ICT, but I find that I really don't need it. The only thing that I do is I do have the midnight line on my chart because price does tend to want to reach for it. So that's like pretty important. I also, I'm going to pull up my trading view chart again for a second. I also use volume imbalances. I know Tanya was talking to you guys about that, but it's a gap from one candle body to the other that price will want to fill. So even though this was our weekly target, the high here, this high, a secondary target is that gap fill at 58.25.50. And then once that happened, then you got your daily reversal. So if you look here, this gray box, we hit that target and then went 2 up, 2 down reversal. So I don't really use fair value gaps or any of that stuff. The one thing I will say, well, no, I won't. Never mind. But just like anything, if you're trying to learn, you got to put in the work. And see here, I'll just show you for example, I do mark my midnight levels, which will coincide with if we get up there and finish this broadening formation, because still we have a green 60-minute candle. It's a 2 down. So even if we don't go outside bar on this 60-minute candle, we would look to go 2 down, 2 up, and then target this high and this high. But we will see what happens. And people who just want to come on and copy trades, like, good luck to you. And the thing about the strat, like, we want you guys to learn it. We want you to join premium, and then we want you to leave premium. Like, we want to send you on your way with knowledge of how price action works. So now, since we've taken out the lows on NQ, we're looking to go back up and take out the highs to finish your broadening formation. High, low, new high, new low, trying to come make a new high. Also, the ICT crowd calls our broadening formations seek and destroy, which it's because I guess they're more used to like trend following. But our bread and butter is these broadening formations. So if you were short from here, target is here, then you don't know. Then you have to reevaluate, take profit, see if you can flip long, go the other way. So then your range becomes, we made a new low here. See how this low, this is actually better because this was kind of an intermediate low. This was a major low because this is a higher low to this one. So we'll have to see. and trading the open is volatile. Hi, Austin. Yeah, we have live trading, live streaming every day. Are we going outside day? Ooh. Probably not. No. We're still below yesterday's lows. NQ well below yesterday's lows. So unless we start coming back up, there's no potential for an outside day here. We haven't even flipped continuity. So you cannot call outside day right now. You can learn more about the strat. The strat's everywhere. I have a playlist on my YouTube channel. So my YouTube is Sara Strat Sniper. If you go to the playlist section of YouTube, I have a whole free course called Stratucation. It's a little fun mashup of strat and education. And then my partner Alex, Alex's Options, he also has a playlist on YouTube. It's called the Strat A to Z. So you could start there. Here, maybe I can. Let me see if I can do this. View your channel. Playlists. Stratucation. View full playlist. I should be able, if it's okay with the NinjaTrader people, to share this link. I don't know. If not, that's okay. You just go to Sara Strat Sniper playlist, and it's called the Stratucation, which is the Strat Principles. And it's, 15 videos? I don't know. I'm going to copy the link. If they don't want me to post it, that's fine, but you guys can find it that way. So again, just view your channel, go to playlists, and then you'll see it here, Stratucation, which I started making that in 2019. I actually remade it in 2023, and I'm probably going to post that new course because, oh, thank you guys. I didn't know if you wanted me to post that or not. Yeah. So I'm probably going to post that because my 2019 videos kind of make me cringe because I was new to the strat. It was an effort to help my own self learn and cut down on the Robisms, which is our mentor who passed away in 2023, almost. It was about a year and a half ago. But I made it to, help me, help others, and it kind of just blew up. But I didn't have a mic. I didn't have any kind of setup. I wasn't trying to be, anything other than what I was, but the people liked it. So I did make a new course in 2023, and I'm going to post that or make it's just an updated Stratucation. It's all the same stuff. It's just a lot more shortened and concise because I did it 4 years after I made the first course. So I had also learned a lot more, and I could also just talk about it a lot faster and cleaner, and the mic sounded a lot better because I didn't have a mic. I just used my laptop speakers, I guess, or whatever microphone was on the laptop, which sounded like trash. Yeah, Alex is I've known Alex, I guess, since 2019. He is 22 years old. He's been trading since high school. He's one of those little, I call him a genius, but he says he's not. But he can solve a Rubik's Cube, so you tell me. Cleaning up the Discord? So the 50% rule, that was something that I kind of coined in my infancy, and now it's kind of outdated. And I can show you exactly what I mean, because we can be in from so much earlier. So we don't really like the 50% rule anymore. I'm going to show you an example. I'm going to put replay mode on. And I'm going to pull over my trading view chart just for this example. So for instance, the reason we were able to call a potential outside day for NQ before the market opened was because of this reason. So, all right, here's this day, Tuesday. If you mark out your range, oh, that should have copied. And it's not. Hold on. Okay. So if you mark out your range, you have Tuesday's high, Tuesday's low. What happened? I'm going to make it big so you can see it. So on Wednesday, they ticked up, taking out the highs. That is potential. This is why we don't enter on continuation. We don't want to go long on a two up day. We look for reversals. And what I mean by reversals is opposite candles. So this is a 2 down. We want to be long the 2 up. So we're either longing a 2 down, 2 up, or we're shorting a 2 up, 2 down. Okay, so anyway, we take out the highs in pre-market, and then if you just go to a smaller time frame, let's go to the hourly. So you can see whatever I post on my daily chart comes right onto all of my charts. So whatever time frame I'm looking at, that's fine. So we take out the previous day's highs. This is well, you've got a bunch of 2 ups. So 2 up, 2 up, 2 up, 2 up. So price is still going up, correct? Yes, it can't not be. Unless you make a lower low, price cannot go down. So right here, you had a 60-minute reversal. This was the first reversal since back here. So if we fail to stay above the previous day's high, we're looking to go take out the other side of the range. So this was the target. So you had a 2 up, 2 down reversal. I still think this was this is overnight pre-market. And the target was at least there to become an outside day. And then I remember I showed you guys the second chart or target on the daily. It's gone now, but or let's say you were trading it right at the open. So you know that we failed the daily high right here. 2 up, 2 down, and then puked right to target within the first 30 minutes of the day. Okay, so ES did what we were talking about. It finished its broadening formation. So you got your high, low, new high, new low. So still trending down. So when the day is 2 down and the week is red and it's a shooter, you look for this kind of stuff. You want to stop out shorts So anybody who had previously been short got stopped out when we took out this pivot high, right? So people are like, oh, like they're stop hunting and this, that, and the other. They're not. This is just how price action works. So you got to go up before you can come back down. So again, even if you're long in here, you got to get out, flip short, because we know that the higher time frames are red, the week is red, the day is red. We look for, we call them TTOs, which is triangle they out, but it's basically just a broadening formation. So we look to stop out shorts, and then they have to cover, and then we're getting in short after knocking them out. And again, the daily target is that double bottom down there, 56.51s. Now, I don't know if we're going to get there. I really wish it would have been so much cooler if I could have come on today, if we had an inside day yesterday, because this is continuation. So again, we don't want to short at the lows. We want to look for that lower time frame broadening formation and then short. Because if you short here, you're shorting at the bottom of a broadening formation. We do not want to do that. That's like a FOMO entry or a chase. You want the broadening formation. You want to stop people out. You want corrective activity to happen and then short. Let's look on the 60, see if we can get some more targets before that day. Oh. Nope, not sure why I've only got, I don't have enough data. Hold on. We'll do it on TradingView then. So when you don't have, when you have a big space between targets, you can go down to the hourly and look for targets. So let me blow this up. So that downside target, pivot lows, we look for pivot lows, downside target, and that is, this is the double bottom on the daily, that 56.51 and a quarter, and then it's 56.51 even. That's the double bottom. So there's, lower time frame targets in here too if you're more of a day trader and you want to take profit, at targets. And pivot lows are always targets because that's where stops are. So 56.88 and a quarter, and then all these. I am much more comfortable on the stream today. I think it's because I can see the YouTube chat. My people are here. And Elaine, she's supposed to be teaching the children, but she's sneaking off into the chat. I see you, girl. Yeah, Rob passed July 2023. Yep. He was at T3. He was at Ticker Talker. He was at another place that I didn't like. Are there upcoming news events today? I don't think so. Pretty sure it was just the economic calendar. Let's see. Nothing like red folder. What time is it? So at 10 a.m. Can I drag this screen over? This is in our Discord. So at 10 a.m., like nothing important really. Consumer sentiment. Somebody, an FOMC member speaks at 12:15 and 3:45. Oh, and there is a free side to our Discord. We've got about 10,000 members in there. Well, I've been trying to get it to 10. Let's see what we're at. Hey, we hit it. Oh, I got to show that. 10,000. So we've got 10,000 members now. And the free side is awesome. A lot of the people in the chat right now, on the YouTube chat, are on the free side. Do you have the NinjaTrader indicator for this? I do. I am not sure how exactly to share it. Indicators. I will have to look into how to share it. So there's this man named Mike Burke who works for or with NinjaTrader. He made this indicator for me. So I'll have to ask him, how do I share it? And then I'll just post it on my Twitter, I think, and then you guys can install it. Free period. Oh, I'm behind in the chat. Brought my glasses today, I can see. And I'm very particular in which days I trade. And what I mean by that is having strat setups. And today we just don't have a daily strat setup because it's just continuation. But Wednesday, like that was the day. And then Thursday, I posted that I really wasn't interested in anything because all the big setups occurred the day before. So I really didn't trade anything Wednesday, or Thursday rather. And that's fine. You don't need or want to trade every day. But if you are trading intraday, wait for broadening formations. Wonder if this is just going to be a broadening formation type of day. But the one trade occurred at the open, and I was yapping about strat setups, so probably won't take a trade. So if you're looking to copy trade, today's probably not the day because I've missed it. Also part of the struggle of being in a different environment with a different setup and different layout and not all my monitors, so it's also a little challenging. Let's look at something else. Oh wait, where's that little... This little guy. Let's look at gold. Gold. So gold has full time frame continuity to the upside, obviously. Come on now. Trying to pull up the yearly candle. It doesn't want to pull up. I don't know why that chart's changing. Something seems to be... Okay, well. So gold in 2024 had a 3-1-2 up reversal, target being a new all-time high, which we have hit, but you can see it's still good. So if you are a yearly investor, you have no reason to get out of gold because it's still going in your direction, 2 up. No reason to get out on the quarterly charts. You've not had a 2 down. It's just been up, 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 so higher lows. So if you're using the quarterly to trail, you could have added on this 2 down, 2 up month, added on the inside month and up, still good. And then on the daily, what happened was this was like a 3-day inside bar pattern, but if you go to the 2-day, you should see an inside bar, yeah. So on the 2-day, you had a 2-1-2 reversal, still good. Silver, let's look at the daily. Oh, nice. So you had some corrective activity, a 2-1-2 reversal to re-enter. And 2 up, 2 up, 2 up, still good. Where's gold, or sorry, silver? Where's silver trying to go? 35.82. Which is a pivot high. Not the all-time high, but trying to take the year 2 up again. Bitcoin. I never look at Bitcoin futures. Bitcoin setting up looks just like the futures. Not just like, but similar. So we failed to stay above the previous week's range, started falling back in. So they're trying to go, they're not going to go outside week because there's only 7 hours left in the weekly candle. But when that candle flips, they're likely going to make a new low. This is why I scream at people to take profit at their targets. They made a new high by like $100, and then 3-2-2 reversal. Puke. Good. Solanke been in gold from the inside month break at 251.26. Nice. Added on the inside week at 270. Nice. Oh. Double click the candles and put 100 in days to load. Good. I will. Double click. Aha. Thank you. There we go. Thanks for that tip. Ah, nice. What was the level on ES? It's coming in to, hold on. It just hit that target. I'll pull it over. That 56.88 and a quarter. That was that hourly pivot low target. So you would have been, Stratters would have been short from this inside down fiver. You may have even gotten stopped out, but if so, you could re-enter. So we've hit that target. And the next target lower is 56.58.75. I did not give the Discord link, but it's in my Twitter bio. And again, that daily double bottom, like, that's screaming to get taken out. It'd be cool if it could do it in the next 45 minutes. Not sure if it will, but it'd be cool if it did. Looks very heavy, so. VIX. So we were short VIX till a 2-2 reversal day. Let's talk about the VIX for a second, which pretty much marked the temporary bottom. So I'm going to pull. Wow, they're really puking. Good. You guys know your targets. So what happened on VIX? We had a double inside month and up. Inside, inside. So you treat this the same as a 2-1-2 reversal. It doesn't matter how many inside bars you have. You could have 5 inside bars. It still has to break eventually. So it hit the upside magnitude at 28.32. So if you were long, that's where you got to make a decision, right? You got to take your profit. You could hold a runner if you want. But what happened? I'm going to delete that just to make it simple. This is an inside bar. Is that a potential reversal? A 2-1-2 reversal? It is. So even if you held a runner and were long, now you got to exit, and now you got to think about flipping short. And what was the target? This target. This is an old line. Let me kill that. That target. And that target. I'm going to kill that side of the chart for a moment because this was a great short because 2 down. So lower high, lower high, lower high, lower high. Inside, add 2 down, 2 down, 2 down. So you could take profit here. You could take profit here. You could add there on the inside day and down, take profit there. When do you have to get out? On a reversal back up. So this was an outside bar reversal. So even if you were in from here, let's pull up the short. Always click on the wrong thing first. The short position. You got to exit there. So 11.5 to 1. Got to exit. So you had no reversal this whole time down, which means what? It means on the lower time frame, it's trending down. So like an hourly downtrend. There are little TTOs in there, little broadening formations in there. Like you'll see one here. Made a higher high. Made a higher high. I think that's a pivot high. Made a higher high. So then you look for those to happen, and then you can re-short. Here, made a higher high. Here, higher high. Then just keep getting short, right? Then that daily flips. You get a reversal. Then you got to take your position off. It's just so simple when you view it as if it's still good on the daily, look for hourly broadening formations and continue to add to your short position. And that was a 32%, 32% without any drawdown, any corrective activity, nothing. Just lower highs this whole way. Yes, go get that 56.50, 51. That'd be so cool if it happens before I get off. And again, I'm not going to be, there's no way I'm taking a trade because this was the trade right here. That little broadening formation. I have missed it and that's fine. I don't know what that means. Okay, well, something has happened. All right, Ninja. We don't care which way price action's going. We just care that we're on the right side of it. Yep. And again, that was your broadening formation high. So you could have got short up there, added on the inside 15er and down. I'm sure there was 5 minutes to add on. That's another thing. We add. So here was your first fiver, and then that inside 15er and down. Add. NQ, where's NQ going? 19,602. Why do I say that? Because that, okay, this little box. Will it ever go away? Okay, I don't know, whatever. It's trying to go down there. 19,602, which is like $96 lower. Wonder if I can just minimize. Nope. I don't know how to get rid of that. So I apologize, but it's staying. It's not leaving. Yeah, buddy. Get that double bottom. So these are intermediate targets. So I make them a thickness of 1. It's so funny that this happened last Friday. Oh, God. Maybe it didn't like that I made it show 100 days of price action. Mm-mm. No, I am not. I got nothing. Really wish that was not there. Anybody? Wonder if Mike Burke has any ideas. I feel like they won't close unless I move. Oh, it just took like 50 clicks. That's cool. So nice. Ugh. Look at that broadening formation puker. So this is what we call broadening formation expansion, because price cannot stay in a broadening formation forever. It's going to expand one way or another. So again, here was that slight higher high to get short. There was the target to make new lows, but then you never got a reversal back up. It just kept, so it didn't. This is one of those instances where you want to leave a runner, you leave a runner because it's 2 down, 2 down, 2 down, 2 down, 2 down. So if you are trailing, trail on the 5s, right? And we can make that say stop. NQ had the exact same thing. Slight higher high. Goal to make new lows. And then this was all an inside 15-minute bar. And then puke. So expansion, and again, because why do we expect downside expansion? Because of the daily target, right? And we got the week is red, the day is red, so we have full time frame continuity. So that is when we expect our broadening formations to expand to the downside, because we know where price is trying to go. Does that make sense? Does anybody have questions? And why is that the target? Because I'm going to pull up the week again. We talked about this earlier, about becoming an outside week. So to become an outside week, we have to take out that low. So that is where they are trying to go today. And then if you go on ES, same thing. They're trying to go outside week, which is that double bottom on the daily. That is where price is trying to go. And how do we know that? Because we know about 1-bar rev strats, we know about time frame continuity, we know about reversals. And again, if you're shorted up there, you're still good. Nice. Charts. Do commissions have a big impact on my profits? No. But I got the homie hookup with NinjaTrader. I've got low commissions. Oh, come on. We got 35 minutes. I think we can do it. We do have a 30-minute flip coming though. So we're always paying attention to flips, especially the 30 and the 60. Because anytime a new candle opens, they can decide to turn the selling like algo or bots off, and you can get 30 minutes of corrective activity. So what we'd like to see is 30-minute continuation down, and hopefully we can hit that. That's what I hope. I really hope we don't get a 30-minute flip and then we get stuck inside and then I have to get off. But you guys know still what the targets are, so. $20 more points on ES, 60 more points on NQ. Nice. I'm glad we got a puker, because last Friday I missed it. We did get the rally though after NQ took out this low. Took it out by what? 604.25. 2 points, and then it reversed. So we did talk about that on stream. And now it's coming right back to our last Friday stream. That's kind of cute. If you stopped out on your runner and now you are out of bullets, you need to wait for at least 5-minute corrective activity. And you might just say, hey, I made plenty, don't worry about, it's only 10 more points, like you've missed, don't give back profits. Where was that entry? That was way up there. Look at that. That's awesome. We're going to move this line. Nope, don't be funny. That was the broadening formation strat short. So 57.28, and the target. Well, if I don't know why you trailed out, you still don't have a fiver against. You had a second entry here, the inside and down. Right there, inside and down. 2, 1, 2 down, and then still 2 down, 2 down, 2 down, 2 down, 2 down. So what this means on a 5-minute, so this is a 5-minute chart. So you have multiple, many consecutive lower highs, which all that means is you have a nice 1-minute downtrend or 2-minute. That's what that means. It means the downtrend hasn't broke. Lower high, down, 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 lower high, down. Again, trying to get to that 56.51. And I really hope it happens for us while we're on stream. This is good stuff. I'm glad my second Friday we got, because we missed the first Friday. It all happened before I got on. It happened before the market opened, really. So this Friday is nice. Great example of broadening formations and what we look forward to enter on. We look to stop out the shorts and then go. So this was a great stream. I am happy with this. Did I miss it? I sure did. Do I care? I do not. Because why? Because the analysis was correct. And that's more important when you're learning and when you're live streaming and not in your element and also sort of sick. So there's a time to trade, there's a time not to trade. See, guys, I've got like chloroseptic spray. Luckily, I didn't have to use it. Also have cough drops, which I might actually use one of those. Yeah, what the heck, Florida? I didn't think you could get colds. Just kidding. But I don't know how I caught a cold. Yeah, good stuff. What? No. Somebody said, what time frame would you give the actionable signal to flip long? Why would you flip long? What color is this candle? How big is this candle? It's huge. You're trying to catch a falling knife. That is not advised. Thanks, Sand Dollar. Frankie. This mic is super close. I'm trying to like not hit it. This is not a flip long day. Because what have we set up for next week? Bearish. No. Get that long bias out. We are much closer to taking the week either 2 down or 3-2 down. I do not use volume. No, I don't use indicators. I have the strat numbers on the screen for you guys. I do not use indicators. I don't care about volume. I don't care about volume profile. I don't care about VWAP. I care about nothing. Just the charts, just the candles, just broadening formations, just time frame continuity. We do not use indicators. Everything you see on my chart is hand drawn. On my trading view chart, I have templates, which makes the drawing really fast. So it's funny, puking, when when we say the market's puking, that comes from our mentor, Rob. We all like kind of speak in his vernacular. And that's just what he called it. And it is puking, and we love it. Okay, I hate that. Hold on, I gotta move this line. It's right in the way. Okay, let's draw another one. I want to see the candle. $51. Now give me the 51.25. Nope. 1 second. Misclick. Okay, well, it's 51.25 and 51. I'll even just put it on the, we're not gonna, there you go. Look at NQ. Boom. And this is when I would say it got close enough, right? It hit 605.50, and let's see, we got a 5-minute flip coming. So if I saw that 5-minute candle flip green, open and flip green, I'm calling it. Come on, do it. You got 40 seconds. Get there before the new 5-minute open. We're always paying attention to the time in our flips. But close enough. I feel like we said where it was going to go. It basically got there. And it will, but People, what does that say? People trying to buy 600 bounce? Let it take them out first. And if you're trailing on the fivers, you still have nothing to worry about. You have not had... This is awesome. I love today. This is great. You have not had a reversal. So you got short. Well, you got short there. You could have added there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10, almost 11 candles. So almost an hour of straight selling with no heat, no corrective activity. Stop talking about long. We're not, there's nothing in the charts. You remember the weekly? And I did say I'd prefer we didn't go outside week this week, but we're gonna. But if we go 3-2 down next week, we're making fresh lows from beginning of March. As long as we can stay below it. So if next week, as long as we stay below this week's low, we're making new lows. So get that long bias out of your mind. And what is going to kind of stink is when, let me see. Where's a calendar? Trying to find a calendar on this new computer to me. No. I don't know. What day is April 1st on? Can somebody tell me who has access? Oh, I have my phone. ES hits target. That is where I would close. Because you got nothing else nearby. They both hit target. My work here is done. Now, okay, now is when we say the easy trade is over, shut down the computer and go outside. If you're expecting more, that's going to get you in so much more trouble. So we get a new monthly candle open. I hate when that happens. On the 31st. The easy trade is over. Now let's look at the 1 minute because I expect profit taking to happen now. 2 down, 2 up. See how they hit the targets and then little greens? That's now they're short covering, which is what you should be doing. If it goes more, who cares? You hit your target with no heat. 0. In 60 minutes of selling with no 5-minute 2 up against you. Now they're hammering it. Why? Because that's where people are supposed to close their shorts. That is where strat traders are taught to close their shorts, or at least exit most. We still got 20 minutes. But that's it. The easy trade is over. It's done. Thank you guys for answering me. Tuesday. Yeah, so Monday's trading will be the last day of the month. And I stream at Stat Discord on Mondays, so it's not going to be a good streaming day because we're not trying to open new positions on the last day of the month. But Turnaround Tuesday is going to be a great time. Oh, what a good stream today. Yay. See that green candle? Is that the first green candle? It sure is. Why? Because shorts are covering where they're supposed to. I'm kind of goofy if you guys hadn't noticed. The Discord link. The Discord link. Here, let's go look at the free side. What are they watching today? I don't know if NinjaTrader likes us. I'll ask before I do that. Oh, I can't drop the link because I'm looking at you guys in a little iPad and I can't move my mouse over to the iPad. Yep, shorts are covering. So even if you were trailing, like, you want to be super tight down here because that's the target. That is the target. So once it hits it, go to the 1 minute. Get out there at 54. And if you're trying to scalp on the way up, I mean, you can, but you would have had to trail out right there. So you would have gotten in long from, and I don't recommend this, but what is this? 56, 54, and the low was 59.75, so like a 5-point move. But again, that's why I said this is where you can expect shorts covering. This is where you can expect profit taking and a little reversal to happen. Let's look at the 15-minute, because it's honestly, it sounds stupid to say, but like that's where it's supposed to happen, because it is. And that's why I'm always like, take profit at your targets, especially targets. Oh, okay. If you guys want the Discord link, just go to my Twitter bio. Or maybe Elaine, if you're still here, or Sandollar. Sandollar, do you know how to do it? You could drop it in there. But again, just go to my Twitter. It's on my bio. Good stuff, good stuff. Good morning. Good morning. Again, broadening formation, puker. Profit taking, expected. Yep, like I said, you can flip the other way, but don't expect a lot. This would just be like a scalp. I wouldn't expect a lot. Oh, okay. Smiling Buddha, you're new. You're a new premium member to our Discord. I saw you. Welcome. You're giddy. He said, I'm so giddy right now. Why? Because price did what it was supposed to do? Yeah. Welcome. Oh, this is just so beautiful. I just love when... Ugh. Beautiful. So outside week. Let's go. I'll show you. This is why we expected the prices that we did. Let me delete these little guys just so you can see it. It's going to be hard for you to see it, but it did go outside week. So last week's low was 51. We hit 50.25. That's the power of multiple time frame analysis and also knowing where price is trying to go. So see, it's marked with a 3 now. I forgot I had an indicator. Marked with a 3. Boom. So this was a great week because we traded it long in the beginning, the first 2 days of the week, and then since Wednesday, Thursday, Friday, short. So we love to trade both ways. Brett McLennan. Canadian Brett? Yeah, guys, hit that like button. Let's do this some more. This was fun. And tell your friends. More chat, more better. Good. QQQ to outside week. Did the Qs? I didn't look at the indices. Let's see. It doesn't look like SPY hit outside week, which doesn't matter because once the futures hit outside week, that means that immediately puts SPY at exhaustion risk and means it's not going to do it, or it doesn't have to. Yeah, so SPY did not hit outside week. But again, the futures are the leader. So SPY is like, SPY follows the ES leader, right? So ES did it. So once you see that 5-minute reversal on ES happen, it doesn't necessarily, it means it's probably not going to hit, but it could. But I'm just saying, once the futures are at exhaustion, that puts your indices at exhaustion automatically. Qs actually did go outside week by taking out 472.41, so that was the target. So Qs did it. You can see it had the same double bottom, right? IWM definitely did it. IWM outside week. So we now have simultaneous outside weeks for next week. So we want to see 3-2 continuation down next week. DI, okay, so the Dow's the only one that's kind of nowhere near it. But again, this is great for next week because say we close here, we want to target down there next week. And if you're playing Qs and Qs and SPY, you can only be short if we're below this week's low. So say we close here. Say we close here. Your target is 466.43, but you must stay below that line. And something that I kind of coined is a take action window, which just means from your trigger to your target, drag it over. So when you get into the lower time frames, like the daily or the hourly, see, that's not even much magnitude at all. You know you can be looking short. You can be pressing buttons. But what's more important is that you annotate your charts properly. The take action window is for kind of for people who don't do that, right? So, okay. Does anybody have any questions? I've got like 12 minutes to kill and nothing else to talk about. Nice. Josh said, today totally sold me on the Strat. Yeah, it's freaking awesome. It's why we're all so obsessed with it. Yes, I'll ask Mike how to share the indicator. If any of you guys know, let me know how to share it. What do you mean, how do you get the VIX? Awesome, smiling Buddha. I guess I could Google it while I'm on here. Okay. Sweet. I'm glad you guys had a good time. I'm glad that the targets got hit while we were on the stream. That made it a lot more fun, and hopefully people can see the power of the strat and the way that we use it and view it. And so now we have our broadening formations, and so next week we will look to expand the broadening formation to the downside, because now we have our slight lower low after our higher high. Doesn't really matter how you draw the line. You could even draw it. It doesn't matter. It's just when we're at exhaustion, you could draw it like this. It doesn't matter. When we're at exhaustion risk, when we get reversals, when time frame continuity changes, and what it's going to take for us to become an outside bar. I wonder here. So for instance, you have this swing high to that swing low, right? So all of these bars become an outside bar of that after this reversal. And we had all these equal lows or double bottoms down here. And like we are always talking about, double bottoms are made to be broken. They're not actual support. They might be for a little while, but they're gonna get taken out, which is so great because we were talking about that last Friday. And there's your lower low on NQ. There's your higher high. So you could view it, this pivot high on ES, high, low, new high, new low. That's your broadening formation. Especially once you start coming back through the highs. If you can't stay above the highs, you're coming back through to become an outside bar. And we knew that on Wednesday because we got a 2-2 reversal. And we love Tuesdays because we call it Turnaround Tuesday. Didn't happen this week. This week we had continuation on Tuesday. But what Turnaround Tuesday means is if Monday is a 2 up in green candle, that also means that the weekly candle is green, because when it's Monday, you only have 1 day of price action in the weekly candle. So as the week goes on, you get 4 more pieces of data. You've got, Tuesday, Wednesday, Thursday, Friday. So when Tuesday comes around, if we get a 2-2 reversal, like I know this happened on Wednesday, but pretend this is Monday and this is Tuesday. So on Monday, the weekly candle is green. On Tuesday, if you get a reversal, that can change that. So it's going to change that. So then that means that the week went from green to red. And that is something we want to know about. And it was something we knew about this week. And why you could look in our Discord, everybody was calling for potential outside weeks on Wednesday because they just know what that means. So Strat's really powerful. It does take time to study, but put in the work. Oh, cool. If anybody would like the Strat indicator for NinjaTrader, say it one more time. Okay, you can send an email to learn@ninjatrader.com and they will, I guess, personally email you. Oh, so fancy. Cool. Thank you. I don't know. The scanner is not ready yet for those in our Discord. It's soon. No, I cannot send you the Discord link. Go to my Twitter profile. It's right there. And my Twitter handle is @TradeSniperSara. Nope, I cannot. I don't have access to type in the chat because it's not on my stuff. Okay, cool. 5 more minutes. What shall we do? Oh, I wanted to see what free chat. So here's just like our free chat. I don't know what they're talking about. Hold on, let's get down. Out, QQQ. Good job, Solanki. AMD doing what it was supposed to yesterday, going for outside week. Let's see. So like they just, they know. What time did we do that? That was at like 10:40. See, look at, close the computer. We know, yeah, when the easy trade is done, I'm done for the day. Out Tesla. They're a great bunch. They're really helpful. They work together. Trade ideas, strat ideas. They post charts. The difference between free and premium is free is just the people. I mean, Alex and I chime in every now and then, or if people tag us. Sometimes we post setups there, but premium, we're live. We have watch lists. We call out setups that we're looking for, targets, entries, all that stuff. So big difference. But honestly, don't join premium until you've done your own strat education because you're just going to be confused. So spend time on the playlists. Oh, thanks NinjaTrader for posting the link there. And again, the easy trade is over for today. Yeah, it might be, but you have no nearby targets on the daily. The next target is all the way down here, and it's very unlikely that it's going to get there today. What it's more likely to do is chop you up trying to short at major lows.
Oh, we are here. Sara, that is awesome. Could you hear me okay now?
Hi, Jim. Yeah.
Until I met
Were you watching the stream?
Yeah, I was watching the stream the whole time. It's great stuff. I'm learning every single time I listen to you. I really appreciate it.
Awesome.
Yeah, and I'm
Yeah,
glad
it's always
you're
awesome
working.
to
I'm
see
glad.
when the chart goes where it's supposed to.
Awesome, awesome, dude. Can you still hear me okay?
I was trying to be quiet because the delay is bad, and you said that you're glad something, and I was just trying to be quiet so you could finish.
Oh, okay. I got you. I'm with you now. So, but all right. So I do want to tell everybody that listen to you, don't be emailing me. Don't send me an email for the homie hookup. I know.
They can't get the
Anyway,
homie hookup. They don't work for Ninja.
I know. In any event, so Sara, thank you. I really appreciate it. Looking forward to seeing you next Friday. So we're going to go ahead and move into the hot commodity segment in a second, though. So you have a great weekend.
Thanks, Jim. You too.
All right. All right. Great follow on Twitter. Great follow in general. Sarah's awesome. Learning something new. I never knew anything about the Strat, and that's a lesson learned right there. It's like even an old guy you could teach an old dog a new trick. Well, it's not picking up, folks. Hang on a second. All right, I might have fixed my cord. Am I good now, Kevin? Sorry about that. Mission Control's like, you're using the wrong microphone. No wonder we were having problems. My bad. Um, I do have the homie hookup with a fancy microphone from Ninja. So in any event, that was awesome. Like I said, I'm learning everything. I'm learning new stuff. Old dog learning new tricks as we go. One of the things I want to talk about, when we're gonna get Shy in here for a second in a minute for hot commodities, but before we do that, there was some chat yesterday, and maybe today, I don't know, but there was some chat yesterday about soybean oil, right? And this is a great example of a commodity market that's very tradable, right? It's not a weird one-off market, right? It's a commodity. Soybean oil is, it's made from soybeans, right? You go and get some soybeans, and then you take these soybeans through a process. You clean them, you dry them, and then you got to crack them and debulk them and condition it and flake it and press it, and you get the oil out. And it's a pretty big commodity, and it's really sensitive to weather conditions as well as trade relationships, particularly between that three-pointed ninja star, U.S., South America, and China. So and you could substitute. There's substitute products as well for soybean oil. It's also used a lot in biofuels, as an example, as a way to make biofuels. So it is a really nice commodity. It's been around for a long time. It's tradable. I'm just going to show you the trading ladder here real quickly here. This is the trading ladder is it's you can see the bids and offers just like any CME group market. This is a sim trade. I just threw this on just to show you kind of how the ticks move. It's a $6 tick. I know it's a little odd, but it's a $6 tick. It's easy to remember once you start trading it if you decide to trade it. And it's, again, a great example of alternative futures markets that you might, the typical, me being one of them, micro E-mini S&P or micro NASDAQ trader might not know about, right? So it's a pretty, it's something, some of these commodity markets like soybeans, soybean oil, wheat, corn, and all that stuff are really markets that you could take a look at. And let me give you an example of yesterday's candle. Yesterday's candle, this big green candle. This is a daily chart, right? The ticker symbol ZL, by the way. And I'm looking at the May 2025 contract, and the ticker symbol is ZL. And we have the candle here, high to low from yesterday. I just kind of like did a napkin estimate here with my ruler. It was a $2.06 move, right? And it's a $6 tick, and it's traded in cents, and that means every point is worth $600. So this was over a $1,200 move on this one candle for one contract, right? So and you can see, it trends really nicely. The moving average crosses work really well in this particular market when you're looking kind of taking a step back and kind of looking at a bigger picture. So it's one of these markets that I don't know. I'm just kind of a fan of some of these. It takes a little bit of practice, getting used to the ebbs and flows, and then it has different trading hours. And then there's this monthly. It's really kind of like the FOMC report for grains. It's called the WASDE report, and it's kind of a grain outlook report. It covers soybeans and soybean oil. It's issued by the Ag Department every 6 weeks. I think the next one is maybe April 11th. I think. Don't quote me on that, but the good news is we're going to have Sterling Smith on the next day, who's an ag expert, walking us through the WASDE report. Sterling's been on the show back in the day, and he is what's referred to as a beast with respect to knowing his commodity markets. So that's going to looking forward to that. So and also the other thing that I wanted to mention, if you do have a question on something about the platform or about anything really, we do have an email that you could use. It's called Learn at ninjatrader.com. Learn at ninjatrader.com. Again, you could send emails there. Me, Mike Burr, a couple other people might pick it up. But if you want to get set up with Sara's stuff, just send it out. Send it out to Mike, and he'll get you going. So that's just kind of the ninja secret of the day. Let me move this thing over here. Let's get rid of the Superdome for a second. Let's see what else we could take a peek at really quickly here. Bear with me. All right, my windows are all in disarray. All right, so I think we're ready to go. I think we have, this is the main event here. We got Shai coming in with hot commodities. Shai, how are you?
Hey, how you doing? How are you
Pretty
doing
good.
this
Happy
afternoon?
Friday, man. Yeah.
I know. Happy Friday. We had University of Michigan sentiment and inflation come in while Sarah was trading. Obviously, inflation expectations came in hot. In fact, the long-term 5-year, 10-year inflation expectation was the highest since the 1980s. So markets, we did see quite a market reaction on that with indices down, and then gold and treasuries move higher.
Yeah, I noticed that too. I saw the numbers come in, and there's a lot of there's more data in that Michigan number than just the headline. I always surprise. I always forget that there's all this extra data in there. So it's a pretty good report.
Yeah, it is. It is. Well, and since we're talking about gold, let's start with gold.
All right, perfect. I have it on my screen right now.
So we were, we still have that contract gap, right? Because we rolled to July, and
I'm
haven't even
in
looked
June
back.
right now.
We were, so June. That's right, June. Sorry,
Okay.
my bad. I have both of them up. That's why I forgot June was the front one. So we made all-time highs again overnight, and then kind of been consolidating here a little bit. We dropped a little. We spiked on the Michigan report. Now we're coming back down. What's this chart looking like to you?
Yeah, so it's funny because on a chart like this, it's kind of hard for me to come up with upside targets because there's a lot of blue sky above here. But I did the extension. We've talked about that already, the fib extension. But then I have a PAX line. I'm going to have PAX lines on my charts now at 31.36 as a target. Yeah. He was awesome today. Yeah, but real quickly,
he's fantastic.
Yeah, let me get rid of this trade thing. Hang on a second, Tracy. Inline edit going on right now. I'm just going to hide my chart trader. Intraday wise, we're right to that JAX1 level. No surprise there. 31.10. We just keep it. The thing that's really cool about this JAX lines is on a day like today, look how many 30-minute candles traded through that exact price. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 14 of the last 15 30-minute candles traded through that level. That's how important they are.
Yeah, that's crazy. So what do you think? Do we get a pullback next week, or are we just moving higher?
I can't imagine. Now, all right, this is just, I don't know anything about economics or anything like that, but I can't imagine April 2nd announcement being anything but bullish on gold. I can't come up with a scenario where it won't be.
Exactly. That was my thought too. Too many expectations uh, about inflation moving higher, a lot of risk. It does seem though that the EU came out earlier today, um, and saying kind of they were willing to deal with the United States a little bit. So people are saying that the EU is willing to quote unquote bend the knee. So we'll see what happens. And then yesterday, Canada said they're going to wait till April 2nd before announcing any reciprocal tariffs to see what those tariffs look like. So it'll be an interesting week next week for certain.
Yeah.
Let's move over. Let's move over to crude. We were making some highs that, that $70 level still proving to be pretty sticky. We have since come off. There's, fears on demand with higher inflation. So, are we just kind of, this market kind of seems like it's been kind of sideways, for the last couple of days here. Do we finally break above that 70 and hold, or do you think we pull back towards that 68 area?
That's a tough one, man. That's a tough call right now. I mean, on the daily candle, we're kind of back below that 50 EMA. We've traded through it. We touched it once. We traded through it 3 days in a row. The retracement's kind of, we're in the middle of it. The moving average cross, though, I have my eye on that. That's the 8 EMA kind of crossing over the 21 EMA. If that separation between the two moving averages stays the same or gets bigger, then I could see some more upside move from a technical point of view. But everything I'm reading too, it's like not only this market, but maybe the middle distillates, which you're an expert at, are freaked out a little bit about potentially, there's a
Right.
global recession reducing demand.
Exactly. And that's kind of what we're seeing. However, I am surprised that crude is holding up with these inflation expectation numbers, to be honest with you. So for the oil bills, that's a decent sign at least. Let's move over to platinum, because platinum's been a mover today. This contract did roll to July. I'm positive on that. We were at all-time highs this morning, or recent highs, I should say, this morning. And again, with those inflation expectation numbers, we had a kind of puke. Again, platinum being more of an industrial metal than a precious metal store of wealth, is also kind of seeing the effect of sort of those recessionary fears, global recessionary fears.
Yeah, it is
What does
amazing
this
how
look like?
Yeah, it's amazing how sensitive this was to that expectations number, isn't it? I mean, it seemed like you said, we were moving on up to this next level of resistance, which was up here about 1026, about 7, give or take. And now we're back down to the bowl of spaghetti, which is the moving averages just all kind of tangled together down here at that 50% retracement. So I'm a little bit encouraged that from a bullish point of view, that there's a decent sized wick at the bottom still of this candle. It's kind of an even candle, right? Decent sized wick on the top, decent sized wick on the bottom, and then the body's the body. So we'll see what happens here, but we're still trading above all of those moving averages: the 8, the 21, and the 50.
Yeah, I think if we can claw this back, this down move back a little bit, the daily candle looked pretty decent.
Yeah.
As you know, I'm still expecting longer term this market to break out of that high at around 1100. Now let's move over to Bitcoin, another mover today.
All right. Now, I think we are officially, the volume's in April, so I'm going to pop up an April chart.
Okay.
And let me just go to a daily too, just so we could see that in a second. We just remember it's a monthly contract, guys. This thing rolls over once a month. There we go.
Kind of look like, remember the other day when I said it kind of looks flaggy? It looks like
Yeah.
flaggy
Oh,
breaking down
oh.
a little bit.
It's so flaggy, I broke my chart.
Oh, no.
Not sure what happened there. Not sure what happened there. I'll go ahead and try to launch this thing again. Maybe we can go side by side for a second. There we go. Give me a moment here. I don't know how that happened. It's the Bitcoin's fault.
You got too excited. You got too excited. It's Bitcoin. No. So it
I
does look
know.
like it's starting to break down a little bit. It's kind of following again, it does follow tech a lot. So, and ES too, but it really has been following the NASDAQ. So given the pullback that we've seen in the market today, I'm not surprised that Bitcoin's following it a bit.
Yeah, and from the
we-
brief glimpse that we had on the chart, from a daily candle point of view, it was kind of moving gently sloping upward, right? Which is not necessarily characteristic of that market, but my dad is slowly coming back, Shy. Sorry about that.
It's all
So
good. That's
yeah,
okay.
we'll see. It'll be interesting to see on the Bitcoin though how it reacts. After April 2nd, right? This argument that hey,
Right.
this is a risk on asset. It's not necessarily a flight to quality anymore. We don't know, but that's going to be an interesting question for me.
Yeah, I think this will be one of the more interesting moves on April 2nd to see how it reacts exactly. And indices will be interesting as well, because we'll see if a lot of this is baked into the cake or not. Kind of like we're seeing the sell-off before the reality comes to fruition, or
Yeah.
if or if it is just not done yet. And again, I mean, UBS did say the other day they were expecting 5,300 on the ES, so that's their expectation. So throwing that out there, seems like some of the banks are rather negative on the indices. Did we get your charts back?
Yeah, well, so I did a pivot here. I've lost you now, but that's okay. I could hear you. And I've just pulled up
Okay.
the web version of my charts. So we could
Cool.
pivot. We could talk charts now.
All right. So let's finish up with this Bitcoin chart.
All right, let me get it up here. MBT. There's my market analyzer on the left-hand side here. I don't see it, so we'll go MBT, and we're going to pick that April. And then I have these two things linked. So if I click on this thing, if all goes well, I am going to get a Bitcoin chart. There we go. So I
There
have a
you
daily
go.
chart up here on the screen
Boom.
right now. All right, we're in business.
All right. So see,
So yeah,
it does seem like
yeah.
that flag's beginning to break.
Right. So let me just see if I could. Well, I'll replicate this later. But so we had that nice trend up, and then you could kind of call it a flag, and then boom, we're breaking down through that point, the tip at the end of the flag right now. And this is, this candle is it's a healthy candle.
All right. We'll see what happens to Bitcoin next week on April 2nd. Let's go to silver.
Let's do
My
it.
favorite market.
So why do I have SIL up there?
So,
I'm going to change this to the main event here. Silver.
all right.
And
silver,
am I
you know-
tracking? I'm tracking May, right?
Correct.
Okay.
So we had, we were well above that $35 level this morning. Again, inflation expectation number. We saw a nice puke in silver, again, because it is considered more of as an industrial metal than a store of value, even though it is a store of value. But it reacts heavily to industrial uses and to the economy more so than some other products. So I'm hoping that we claw this back and we close over that $35 mark. That would be a very healthy sign for silver. What's it looking like to you?
Yeah, so just glancing at this daily chart, that $35 level is an awesome level to look at. The previous candle here, this is a benchmark candle. It's pretty big, and when I see this the day before, I'm looking at the midpoint of the candle. It's called the piercing line, and I'm lining up that piercing line with this previous session's I don't know, 1, 2, 3, 4, 5 or 6 days of resistance up here. It lines up perfectly. So that's my new line in the sand right now for this market. And so as long as we close above this right here, I'm going to feel more like we're going to have a continuation to the upside and less like we're going to have a retracement to the downside.
I like that answer, Jim. You just made me very happy.
All right. Okay. All right. Awesome, man. Do we get to everything we needed to?
We did. So we will have a very active week next week. So I hope you have a great weekend, and we'll have a full week of hot commodities next week.
Thank you. You too, Shai. All right. Don't know what happened there. I do know though, I was able to pivot onto the web-based charts, and hopefully everybody knows we have web-based charts, right? There's 3 different ways to trade, so to speak. You could trade with the desktop, which despite today is very. This is probably more on my computer than anything else. It's a pretty robust platform. There's the web-based, which we're looking at right now, and there is the mobile app, which it's recently released, and it's really awesome. It's the best, in my humble opinion, the best futures trading app that's available. And I've used several of them. And I'm not just coming from a point of, I work here, so it's good. It's good. So if you get a chance, it's particularly good. Like, you're sitting around the couch at night, and you want to see some quotes, or even manage a trade at night. It's really, really robust. I didn't think they'd be able to really get a good Superdome on a cell phone, but I was completely wrong. I mean, it's really, really, really pretty good. So in any event, that's the 3 different outlets you have, and they're all seamless, right? You open an account and you place a trade here, it shows up there, and all that stuff. So it's all integrated together, and it's pretty good. So another thing I wanted to show you, now that I have the web-based up, I'm gonna hit this little plus button up here, and these are all the I'm gonna call them widgets. I don't know if they're widgets or elements or what you call them, but I'm gonna grab this pulse. Let's grab the pulse, and I'm just gonna position it to wherever I want it. So you could kind of highlight it, move it around, position it to wherever you want it. And now I'm logged in sim mode, so keep that in mind. You could also, if you have a live account, you'll also have access to Pulse, and what it tracks are real positions, right? So if this were a live account, this would track real positions at NinjaTrader, and it kind of gives you the pulse of what traders are thinking, right? So this is tracking sim trades at NinjaTrader. The live one will track live trades at NinjaTrader. And it's kind of I don't know, like a sentiment guide, right? You kind of see what people are thinking. So as an example, even the S&P right now, folks are 16% more long than short. Now 17% more long than short. And so you could kind of, we have the E-mini, and then the E-mini and this is also very interesting. E-mini and the micro E-mini, they have different numbers, right? You say, okay, the folks trading the bigger contract are only long for, 14% more. The folks trading the micro E-mini are 50% more long. So you get, again, when you're in live mode, you're going to get that live data as well. Just keep in mind, this is sim data, sim trades. And then you could do the same math with the NASI and the micro E-mini NASI, the Dow, crude oil, gold, and E-micro gold. So it's kind of a cool little widget here to have handy on your screen when you're looking at it. So I'm going to go ahead and close it up. So that's that. Any questions on that, let me know. Let's close that up. Let's just go to, again, modular, really easy to move around. Let's just click on that E-mini S&P just to see what we're doing. Now, I don't have my JAX numbers on here, unfortunately, but I do remember a lot of them. So let's just take a peek here. We'll start out with the day. We'll start out with the daily candle. And not looking good, right? We have nice sell off, a little bit of a retracement, about that 38.1%, selling off again into the weekend. Pretty decent sized candle here. It's not a baby candle by any means, and we're tracking 56.50. So that's kind of a key level as well. To think about that 56.50 level, that even level. So far, we wick to it and we kind of pop back up, but not by very much. This is looking pretty bearish right now. I could drill in further too. It's really easy. There's a little interval button up here on the web-based trader. I'm going to go ahead and we'll change it to a 30-minute candle. Again, moving the screen around is super easy. I have a volume profile on the right-hand side, and it's worth noting here that this volume profile is a double distribution, right? So we have a lot of volume up, higher up, right? Before we had the big break at 10 o'clock, and now we have a competing area of interest or volume node, I'll call it, right? We'll call it a volume node. With that point of control, we're just trading right at that point of control right here. In between is lower volume area, and I call that price unhappiness, right? This was all one candle, right? One candle, 30-minute candle created all of these little volume histogram bars until we kind of slowed our roll down here, and that was approximately 56.63. So then the next point of control, 56 is kind of where we're trading at right now. So a lot of volume down here as well. What does that tell me? It tells me that the paradigm of pricing has shifted. So folks have decided, okay, traders have decided, all right, we were happy up here for a while until the news hit, until the bad news hit, and then boom, now we're starting to develop happiness again down here. So we have a paradigm shift, lower prices in the E-mini S&P. And we all saw Pax's numbers this morning, which are, they just become reality one after another. It is amazing. Fury area is still talking about ZL, the soybean oil trade. Yeah, these are great commodity markets for sure. Coach cleats. You could use this on a Macintosh. Absolutely. You could use it on a cell phone, but the mobile's better for that. You could use it on an iPad or I guess they're called tablets. So it is kind of handy, especially for Mac users. We used to have to download, I think they're called Mac Parallels or some kind of software, so you could run your Mac as if it were a PC. That seems that's a little wonky, but in any event. Kind of move this over. All right, let's keep rolling here. Let's go to NASI. Let's get that centered. And again, systematic price behavior, big sell-off on the news, volume node up top, volume node up at bottom, market weakness in between. Price happiness is right now, situated south of, I'm going to call it at about 19,650. down to 550-ish, something like that. That's kind of where we're spending some time at. The kind of these bodies of these candles are getting a little bit smaller, but don't let that fool you. That doesn't mean the bottom is in, right? Anything could happen going forward, including unplanned news, right? We could have some unplanned news. You never know what's going to come out of Capitol Hill these days. So keep that in mind. But again, this is looking kind of weak. Let's just claw our way through my list here. We'll talk again, systematic price behavior between all of the stock index futures. Here's this is the mini Dow Jones, the $5 Dow. Never trust an index over 30, they say. And again, same double distribution, same market weakness in the middle here. And the big dominant candle looks a little different here. It looks a little more bifurcated between 9:30 and 10 o'clock. But maybe one would argue, well, YM got a jump, got a head start, didn't wait for that gun to go off, and it just started the race a little early. Russell 2000, I imagine we're going to see the same thing. Although, this is not a really great volume profile. We have some volume nodes, but then we have all these intermediary volume nodes, right? Intermediary volume nodes, intermediary, and then the main event is right here, right now. So again, I'd like to see some sort of retracement back up a little bit further before I'm like, all right, we're gonna kind of have an end of day rally, right? What are the chances of having an end of day rally? Well, we're gonna go to Edgeful's website, and they'll tell us what the odds are. All right, 30-year Treasury bonds. I have a little bit. So here's the 30-year Treasury bond market right now. Just a big rally up and again, and then that Michigan number really kind of turned this thing around, right? It wasn't the core PCE, but it was the Michigan number that kind of turned this thing around. And now we're kind of retracing nicely here as well on the bonds. The one thing to think about on the bonds and the notes, whether it's the 30-year Treasury bonds or the 10-year notes, or even the 5-year, 2-year, whatever you're looking at, is these volume notes here are probably more important in this market than any other market, because they do tend, in my experience anyway, they do tend to have they act as a magnet kind of. And so you can see right here, from a retracement point of view, there's an awful lot of volume at 1:16 and 19:30 seconds. So. Ferriari asks, when will you have Jason Shapiro on? I don't want to miss this one. Actually, I have some good news. He's going to be on. I can't remember the exact date, but it's not next weekend, but it's the week after that, and I believe it's the Tuesday, the week after next week. We are going to get Jason has graciously agreed to appear. It'll be a 11:15 segment. So we'll have a good half an hour with him to kind of talk about what he does, and he could show us his charts and all that stuff. So thanks for that question. Very appreciate you. And I haven't met him yet, by the way. So I'm totally pumped up about meeting this guy. All right, let's keep rolling. 10-year notes. Less of a retracement back down, right? Remember, this is when you go from 30-year to 10-year, you're going from the long end of the yield curve to the middle part of the yield curve, kind of, right? So 5, 7, 10, middle. You get to 2 and less, and you get into the bills, then it's more the short end of the yield curve. Some people clump in the 2 with the middle. It just depends on where you're at. But for me, this is closer to the middle than the 30-year, and as a result, we see less of a drastic type of retracement back down. It's more sticky up here. Right here, right now. And that's the 10-year. The symbol is ZN on that. Let's keep rolling here. Let's see. We talked about crude oil. And here's crude. This is the 30-minute candle chart. And it's a naked chart. I don't have anything up here except for the volume profile. I'm learning from Leo, Nick, Stowe, and Elias, by the way. I love the way they analyze the markets. They are trading the close with us Monday through Thursday, 2:30 to 4. And not only do they have a great perspective on the markets and their trade methodology, I think is really good, but they're highly entertaining. I mean, these combinations of these order flow lab guys, very entertaining. So right now in crude oil, I don't know, we're getting close to the settlement time. I can't remember if it's 1:30 East Coast time. I still have my time zones mixed up from I lived in Chicago for 58 years and then I moved down here. So my time zones, I'll never get those right. In any event, we're kind of we're going to most likely close below $70 today, right? We have a double top up here, approximately 70 spot 08. A little probe wick down here. Tom Snyder used to call these the probe wick. It's 69.24, but we've kind of stabled out here. I don't expect much price deviation being a Friday unless there's some kind of crazy news come out. So I'd expect this to kind of trade in this general area here, and I'll just kind of call it at 69.53, where this volume kind of right before this volume drops off. And then down here at the bottom here, 69.36. So that's kind of my range for the rest of the day. Again, it's going to slow down, especially once we hit settlement. All right, let's keep rolling here. Let's see if we haven't talked about nat gas, but why not? Nat gas on a 30-minute. This is a tricky market to trade. It's a little dangerous to trade. It moves like crazy. You could do some damage. So you got to be careful and you got to focus on it. There's so many dynamics in natural gas related to the whole energy sector that you really got to follow Shy on Twitter, by the way, a Shy girl on Twitter for this kind of stuff because she's a genius. But let's just kind of take a look at a daily chart here. Day. Kind of forward that a little bit. So a little bit of consolidation. We talked about the warm weather and all that stuff. We got a area support around 3.852 on the upside. Let's see, let me get my mouse right. About 3.951. So, all right, all right, Cags. I don't know who this Cags guy is in the chart, but I heard he's a good trader and he's a super cool cat. Yeah, I know. I'm a little bit older than 58 now. So, but we're not going to disclose if we don't have to. Oh, man. Heating oil, again, this is ultra low sulfur diesel. This is, Ferry says, nat gas is gappy. Yeah, it is gappy. Ultra low sulfur diesel, aka heating oil. This is a NYMEX market, one of the sub exchanges of the CME group. And this is a daily chart right now. It's kind of I don't know if this is I'd have to ask Schneider this, if this was a cup and handle formation or what it is, but we're kind of like we're trying to retrace back up to these previous highs. These previous highs, resistance 2.40. It's going to take a lot of love to get back up there. So I'm not worried about that happening today. And but a decent sell candle today. And let's just take a look at the 30-minute real fast. So yeah, a little volume's accumulating down here. And again, I think this is going to be kind of like crude. It's going to be, we're getting close to settlement on a Friday. So it's going to be kind of small ranges from this point out, short of some crazy news that comes out. All right, let's keep rolling here. We're just going to go down my list here. RBOB gasoline. Everybody should worry about RBOB. Let's go back to the daily first. Driving season. Is this driving season yet, or is that the summer? We did have that spring break happen, and it might be still happening. It depends on where you go to high school or grade school. I think like the Catholic schools have different weeks than the the parochial schools. But in any event, this is a daily chart, and we're having this like V-shaped recovery, right? So this is a nice trend up. We're still in the trend channel up. This is still a bullish trend for me. We're about 50% retraced to the highs up here, which is approximately 2.37. But again, I'd expect this trend to continue up based on this whole, if not for anything else, but for this this global consumer sentiment which ultimately could drag on consumer spending. But so this is the RBOB gasoline contract. It's a good contract to trade also, specialty contract. Let's take this Euro FX. Euro FX versus the US dollar looking pretty strong. Shai mentioned the news. Shai mentioned the news about I'm drawing a blank now. Why did I say that? Oh, about the European sentiment, not sediment, and potential behavior of the ECB, and but more importantly, coming to the table maybe a little bit on last minute tariff negotiations she was talking about. So that's what it was. Sorry, my 58-year-old brain, Cags, was kick it in there for a second. But any event, this rally, this is not a substantive retracement back whatsoever. We're kind of charging our way back up on the Euro FX versus the US dollar. Great contract to trade, by the way. If you and I have the wrong month up, of course. I have April up, but it's going to look similar. Here, let's see if we could roll it from here. How do I roll this thing? Let's roll it forward. Right click, roll forward. Still not there yet. Right click, roll forward. There we go. That's a little better. This is the June contract, guys. Sorry about that. I got to update this market analyzer a little more often. But the pattern's the same, right? The pattern's the same. We're exactly, tried to retrace a little bit, bouncing back up here, and kind of that's where we are at. I'm going to go ahead and roll forward the Japanese yen too to get on the right month. We'll take a look at the Japanese yen as well. Oopsie, sorry about that. No, I didn't want to place trade there. You could place trades on this too, by the way. So, Mr. Yen, again, let's see. Wait, what's going on with my contracts? It's supposed to be synced. There we go. There's Mr. Yen. So, Mr. Yen, I mean, if you've been following the yen, I mean, it's been brutal. It's just been brutal for a long time versus the U.S. dollar. The auto tariff thing's probably going to hit harder here. They were suggesting only a 0.2% hit on GDP for the Japanese economy because of the 25% auto parts tariff. We'll see if that sticks. If that's sticky, it probably will be April 2nd. But that's going to be a market mover here as well. If that does stick, that's going to be a market mover here as well. So I'm a Toyota guy. You guys, I don't know if you're a Toyota Honda person, but I am. They just seem to last. I mean, these cars last forever. I think I still have I don't have it. My son has it. It's a Toyota Highlander, and I think it's a 2012. And the thing is just awesome. Anyway, no more pitches for the Toyota Corporation. Let's look at the dollar index real quick. Dollar index right now. Do I have the right month? Yeah, I have the right month. It's June. The dollar index right now is kind of bad. This is a nice pattern here. We have a really nice area of support right here on the dollar index. That's approximately 102.87. Big sell-off here. No retracement to be found, right? No retracement to be found right now. Now, they could turn around on a dime, of course, but even this little baby retracement that we had, sellers came in, rejected that yesterday. Continuation selling today. Maybe we'll get a drive back, creating if you use your imagination, a triple bottom down here, and and that's kind of where we're at on that. Let's just kind of drill into a 30-minute chart, and we'll talk a little bit about where we're at right here. Oopsie. So again, this is today, big sell-off today on the news. Not surprising. Well, actually, this started off early. This started off on that PCE number. So this market was more sensitive, or this index, I should say. It's a market, but this index is more sensitive, was more sensitive to that PCE number than some of the other indices we've been tracking. All right, let me fix my gold contract too. Here, I'm gonna roll forward. Make sure I get the right month going. Oopsie. Appreciate everybody's patience here. I had a equipment malfunction on my PC a little while ago, so I'm working with the web-based charts. So 30-minute chart. This is intraday, really nicely range bound here. We have a low around 30.89, a high around, and again, I'm going to use the bodies of the candle instead of the wicks. 3107 half, and there's some volume profile right there. Mark S asks, "What is price happiness?" So it's funny. It's a term I learned from Dan Grams of all people. And when you're looking at either a market profile or a volume profile, you get that distribution, you get that bell-shaped curve where you have a really clear single distribution, and then you have a dominant point of control or an area around that point of control. One would say, well, a lot of traders were happy making a transaction at that price, right? It's the biggest volume histogram. This one's not so good here, but it's the biggest volume histogram on the chart. And so when I see that and there's no more news and the volume profile is mature, it's like, all right, the point of control is called price happiness, right? This is price happiness. Nobody likes price unhappiness. I don't know, maybe you do. Anyway, that's when I say that, that's what Mark, that's what we're referring to. Um, let's keep rolling here. Dollar index, gold. Let's just look at a daily really quick. Let's look at a daily really quick here. And again, we just rolled over here, so keep that in mind. And no, it's still showing me. Hang on, sometimes you got to click twice. There we go. We click twice. And there we go. I mean, this is just a huge rally. Another all-time high, as Pax pointed out, as Shai pointed out, as I'm pointing out. A lot of people calling for 32, even $35 gold. We're working our way up there. And again, as we just talked about with Shai, it's like if I have to have a bias here, this bias is going to be bullish. I'm jumping on the bandwagon with Peter Schiff today. I'm not always on the bandwagon with Peter Schiff. Sometimes some of the things he thinks is a little bit radical for my tastes. I'm conservative. I don't know, but Peter has his focus, but nice, just kind of a nice move up here in gold. And again, I expect it to continue. We'll see how high. We'll see where we close, right? We'll see where we close today. The higher we close, closer to that wick, in my mind, the more chance of having a continuation rally Sunday night into Monday. So we'll see what happens to that. Roger that, mission control. Thank you. Let's keep rolling here. Silver, we kind of talked about with Shai. Let's go. Let's double cover copper though. Dr. Copper. Again, starting with this daily chart here, we had that really nice doji that we were talking about at the top. This really nice, gravestone doji, you can call it. When I look for those kind of, and it's not a perfect doji, but it's pretty close. It's called a gravestone candle, I guess, not really a doji. A doji is where the open and close price are exactly the same. So you see that slanted line going across. But it's a small body candle, so it's close enough to say that. But it's when you see it at the top of a big trend move, either up or if it was reversed on the bottom, down, that oftentimes is a good signal that, hey, at least for now, the top is in. And what makes this candle even more special is the size of the wick on top. It's a big wick on top. Sellers came back in, then pushed us down, and then boom, we're kind of stalled right now, right? We're below the midpoint of the previous candle. Remember that midpoint? It's halfway between the body, the open and close of that candle from yesterday, and that's not bullish right now. But we'll see. The day's not over completely. I'm kind of open-minded here over the weekend, but I feel like we're we should pick it up a little bit, unless this is a true turnaround. If this is a true turnaround doji, yeah, we can get that 38.1% or that 50% retracement. Or if you're using harmonics, then it would be, you know, let's see, it'd be 25%, 37%, and then 50%. Those are the harmonic levels instead of the native, we'll call them native fib levels. What else do I have on here? Let's see. I'm going to have to roll. Oh, Bitcoin April. We'll go over Bitcoin. Why not? Hit that arrow to straighten things up here. Love these charts, though. They're very clean. You know, I should kind of give you a guide. There's all these little buttons here that help you do stuff, right? You could zoom in, zoom out, change the interval. This is you could change the type of candle. This is a candlestick. We'll keep it there. Chart settings are in here. This little gearbox you could help configure. And then indicators, you know, these are indicators, and you can kind of go off, you know, follow the arrow to get more and more. So that's how this kind of upper area works. And then there's templates here if you have templates that you already installed. There's also a whole third party here of plugins, by the way, if you want to use the web-based charting platform. There's drawing tools. Here's the drawing tools. A lot of great drawing tools you could use here on the web-based as well. So, oopsie, I didn't mean to do that. My bad. We're still on the Bitcoin. So Tracy pointed out this flag pattern here. Yeah, we have a decent size. This is a relatively big candle here. This is the biggest body of a candle that we've seen probably. I'm not going to do the math in my head, but just looking at it, probably since the middle of March. And we're kind of just, again, might be closing on the low here. I think this weekend's going to be one of these risk-off weekends. Just thinking about, you know, what could possibly happen. Now, good things could happen too, right? You know, we're all worried about the April 2nd tariffs, but you know, my guess is that folks are going to be working behind the scenes all weekend long to try to position their, basically what we're doing is we're renegotiating trade agreements with, you know, as a bulk, which, you know, I don't know if it's a good idea or a bad idea, you know, hate it or love it, but it certainly is ambitious. So there could be a lot of like stuff going on behind the scenes this weekend that we don't know about. So Monday, I'm not totally doom and gloom, but I think going into the weekend, it might be wise to maybe do a little risk off. All right, I have coffee up here. You guys want to talk about coffee? Let's make sure I have the right contract month up though. I think I did. Let's go back. Coffee, sugar, cocoa, COMEX exchange in New York. Another one of those softs. We call them the softs market, right? The softs market. And, you know, these are tradable as well. And they're specialty markets though, right? So you have to know things like weather. I don't know if this is on anyone's. If this is on someone's tariff list, then those are fighting words. I'm coming after you because I can't. This morning we had a coffee incident, by the way. Jeff, I'll get to that in a second. This morning we had a coffee incident at the Cagnina household. And, you know, again, I set the pot up the night before. I got one of those timers, you know, you plug into the wall and you could set the timer, filled the thing with water, and then woke up this morning, went to the machine and it made the coffee, but I forgot to put the coffee grounds in the thing, right? So now I have I have a carafe of hot water. It was horrible. And so I was like, all right, that's fine. I'll just make another one. It's going to slow my roll a couple of minutes in the morning, but that's okay. I'll make another one. So then I couldn't find the coffee beans. Now, this is not a case of guys can't find anything. This is a case of we were out of coffee beans. So I had to make a little espresso, which was good enough. A little espresso, one of those little Italian metal espresso things. It got me going. And then Mrs. Kaggs comes to the rescue and brings me she went to down the block to the Estuary brew pub where apparently they sell coffee in addition to beer. So there's coffee in this. There's not beer in this. Jeff says the data is way too pricey for the softs. ICE is just crazy charging. So yeah, no, I hear you, man. I know, but again, this is a specialty market. I just threw it up there just to kind of and sometimes it's good to track just to kind of think about when we think about inflation, we think about the basket of goods that we have to, what do we buy every day, right? Well, we might not buy cotton every day, but we buy coffee at least I do. And I don't know about you guys, but at least I'm a big coffee fan. Fatfish says that was tragic. Glad you had espresso backup. Fatfish, I'm a little mad at you, man. You were fawning over packs this morning. I thought I was your favorite, and I think I'm in second place now. Like, what is that all about? Joking aside, Pax is a great guy. Any other questions? Any other things? We're not streaming this afternoon. We are taking the afternoon off. Next week, we got a great lineup with a lot of the folks that you've already seen, some new folks that you haven't seen yet. It's a full calendar next week. We're going to be working hard, so get some sleep. Be relaxed, get some sleep. Ah, there you go, Fatfish. All right, I feel better now going into the week. Going into the weekend, man. I do appreciate you. Just for perspective, we started NinjaTrader 1.0, NinjaTrader Live 1.0, I don't know, a few years ago, a couple of years ago, a long time ago. And Fatfish was one of the early adopters of the stream. So I appreciate you, and of course we appreciate everybody who's in it right now. So without any last second questions, man, I'm going to try to fix my charts after this afternoon. My desktop probably require a reboot, and then get back involved by, I'll send some tweets out later on this afternoon. So I do want to thank everybody for coming and being here with us. And I do want to, since this is it for us today, I do want to remind everybody the most important message of the day. We'll probably finish a couple minutes early, Mission Control, but I do want to remind everybody, please be safe out there and be good to each other. Thanks for coming.